Yo, hey, good morning, everybody. Welcome back to another episode of Market in the Morning. I apologize for the delay in start, having some technical difficulties on my end, but everything's back up and running. We have CPI in just about probably 5 minutes from now, so we've got a lot to cover. So we're bringing on the one and only Noab as soon as we are prepared. So guys, smash that like button. Market in the Morning starts right now. Yo, Nil, good morning, brother. Finish
Morning,
your
Kevin.
sip. Good morning.
How's it going, man?
Dude, doing good, man. It's Tuesday, CPI, expecting a little volatility.
Yes,
Who's
sir.
ready?
Oh, I'm excited, man. This is a very key report that we need to quickly break down because we got CPI in about 6 minutes.
That's
So
right.
thanks a lot, ladies and gentlemen, for joining us. Kevin, let's smash the like button before we give out some sauce over here. Like get that likes going. We need
Yes,
we need
sir.
100 likes this session.
Oh, bro, let's
Buy
get
or
it.
sell. Buy yourself. If you got conviction, you'll do both today. You'll do both. You'll become the wick on each side, and that's how you get that sniper entry. But before you jump into it, thanks a lot for coming, guys. We got a big stream planned. This is our CPI big day of the month. Happens every single month, so it's not a big deal. Honestly, it comes every single month. Don't get your panties in a twist. We're not here to full port our accounts. We're here to logically understand what the print actually means relative to the forecast, the prior, the minimum and maximum, and then how are we able to then translate this into market movement and actually understand what this means and whether the markets take this as a surprise factor or is this fall in line within the expected ranges that we have, the minimum being 3.6 and the maximum being 4%, meaning the markets are already prepared and are expecting a print within this minimum and maximum range. If we were to exceed on either side, that's when you'd get that excess volatility and that clean one-sided movement. And you see this happen on the NFP from 2 months ago, where you got that 172,000 jobs report, and it came out almost 50,000 over the maximum, being 125K. So it came out almost 50,000 over the maximum. That's taken as a surprise. So if we're within this range, it's going to be a bit muted. And if we're right on the forecast, it'll definitely be muted. But within the range can be still create some volume and volatility. So I'm going to click this sparkle icon over here. And then you can clearly see that anything higher, any reading that's above the forecast is going to be bullish for the dollar because it instills to the markets that financial conditions are going to remain tighter as rates will remain higher for longer. So you see more inflows into the dollar. If it comes out lower, minimum lower than 3.7, lower than the minimum of 3.6, now you get a very bearish dollar because this implies that the markets are pricing in rate cuts. And what do we know? That the dollar does not perform well in a rate cut environment because it devalues the dollar. Quantitative easing, the increase of supply of money devalues that currency, right? So lower rates, quantitative easing, low, it's going to result in a lower value for the dollar. And in correlation, gold will see you'll see a much if inflation comes out higher, you will see gold outflows because gold does not perform well in a tighter financial conditions, and then same with U.S. equities. So now that we have our playbook set in stone, now we can quickly dive into what's happened overnight. Overnight, gold rejected this area. I told you guys, don't get too caught up in the sell-off. We're approaching an area where you have to be very vigilant in where you're selling. Sells are valid from the top. You're writing them down 100%. But as we start dropping into here, man, I'm not looking for those sells. Like, look at this demand area that we have. Plus, now you have inflation. Now we're expecting to come out lower than prior, right? Excuse me. So, and here's my prediction. I think that, and I could be completely wrong here, but I'll put my balls on the line. I think inflation is going to come out at 3.7%. The reason I think it's going to come out 3.7% is because the minimum was 3.7 previously. Like last week, the minimum was 3.7. You can watch the reports from last time, like the lives from last week, but this was a 3.7 minimum that we had last week. And they moved it to 3.6. I do think this is going to come out at 3.7, maybe even 3.8. The lower it comes, the more bullish it is for US equities, the more bullish it is for gold, the more bearish it is for dollar. Okay. The higher it comes, the opposite. So yes, we only look at the year over year figure. Year over year is what the market looks at. Market expects, or markets are always pricing the year over year figure. Month over month is volatile. When you look at it on a yearly basis, you're able to tell it like what is the difference between inflation June 2026 versus June 2025, right? So yeah, these readings month over month, you can basically ignore it. It doesn't make a difference. The markets always react to the year over year number. They don't give a shit about the core reading. They don't give a shit about the core CPI month over month. Yes, it's important, but the market reacts to the headline reading, the headline CPI, not the core, because this includes energy and food prices, which are more volatile. So this is what we're gonna do. We're gonna wait for this release in 3 seconds, and we're just gonna watch, and we're gonna pay attention and see what comes up. So CPI, 3.5. Come on, man. Come on, man. There's your gold buys. There's your gold buys. Told you guys. I fucking told you guys yesterday. And guess who is about to close some positioning right now?
Oh my God, bro, let's go. Let's go. W's, man.
I told you, I was so confident in this inflation play. This was a blessing from God. Man, what did I tell you guys start of the week? I said anticipate those buys from over here. And there it is. There's your move. Like, this is what I mean about being pre-positioned in the market. I'm in those buys from here, man. And I added right before the data came out too. I added 30 minutes ago. So guys, now watch this. Dollar, big red candle. Big red candle.
Yo.
US equities, big green candle right from the buy zone yesterday. Come on, guys. This is how you trade financial markets. You understand the data. You see where it lands. Wow. Below minimum. Very bearish. Keep that in mind. CPI low, very bearish dollar. CPI low, very bullish gold. CPI low, very bullish NASDAQ. Now you understand, right? Look at this. Guys, come on. I need thumbs up. I need a round of applause. I need Kevin out here every single day. Come on, guys. This movement. Now what I'm anticipating, and if we want to dive a bit deeper, we've just had a massive fuck you candle to all the sellers out here. All the sellers who were doubting me. Yesterday, I had 10 people DM me telling me I was wrong about my inflation bias. You motherfuckers, I hope your light bill goes out this month. And no, I'm just kidding. It's all fun and games. You know, this is the best part of financial market. We come together, have some fun. So now what I'm going to be paying attention to on the intraday time frames to take advantage of these moves over the next daily period going into the end of the week is riding this sentiment. So what will I watch for? I'm just going to remove these magical arrows that I had that always, for some reason, play out. And then people end up doubting me. Like, look, yes, I was saying gold can either push up from here or here. Guess what? This didn't play out, but I also didn't take it. But I took this because pre-positioning for data works. We also did this in NFP. We pre-positioned ourselves and the number came out hot, came out above maximum. And then we also did it for FOMC. And then we rode that sentiment. So exactly how we rode this fresh FOMC sentiment, we're going to do the same with gold, NASDAQ, US equities. So we'll analyze that just now. And then we'll also keep an eye out on market and just where we are approaching. So clearly you can see something just took place on this candle. So if I click this, we'll be able to analyze and figure out exactly what went on. Now, when coming back to here, guys, remember to join us tomorrow in our stream. We're doing the official launch for our TradingView integration. Walsh is just coming out saying inflation will surge behind US if policy is correctly implemented accordingly to congressional remarks. Wow, I am just loving this pump right now, man. This is beautiful. Like, you guys, I just want to say this is a game of probabilities, but if you understand what is happening, like I mentioned to you guys, the markets are already forecasting a drop. So if you can get positioning into your market before the CPI report comes, you have a higher likelihood of succeeding. You have a higher likelihood of CPI playing in your way. All I did was wait until Asian session to take my gold buys above 4,000. As soon as gold came right back above 4,000, I took those gold buys. And what ended up happening overnight, I let it go. My stop loss was below these lows. We were up here before inflation. Worst case, I would have got taken out at break even, right? I would have gotten taken out, and then boom, the other side played out, which is what we were expecting. Now, if we get any sort of pullback, you start seeing pullback corrections into some of these deeper levels, like something like this, or even like when you pull back down maybe to 50s, react. If we get anything like this on an intraday period, I would look to take your scalp or intraday buys from these levels. The sentiment is still fresh, so this positioning can play out. This came out below the below the minimum, which is so important here. Is that this completely out came right below the minimum over here, 3.6. Not only, sorry, I don't know what just happened right there. Not only is it below the forecast, right? Because if I go to a dog shit calendar like Forex Factory, right? And I really wanted to hate myself, and I look at this reading 3.5 forecast. I'm like, wow, okay, you know what? Came out below forecast, but that's not what matters here. What matters is it's the minimum of 3.6, right? And what this implies is that markets are pricing in those rate cuts. And I'm sure there's definitely a rate cut headline somewhere that came in here. Oh, markets anticipating rate cuts, right? And look at this. The best part is you can click any of these economic data headlines and also get the same playbook, right? So you can do that. Short-term interest rate futures jump after inflation data as traders slash bets on Fed rate hikes. What did I say, guys? This is macroeconomics. This is monetary policy in play. Exactly that I drew here. I said, guys, when those rate cut bets are back, guess what's going to happen to gold? Gold's going to chug away. Here's that piece of data that's pointing towards those rate cut bets. Guess what's happening to gold? Gold's chugging away. So everybody who was telling me that gold was going to dump till 3,200, 3,400, what do you think, guys? This is like gold has never sold off like this. The only time it has is 2022, and that entire switch was when the market went from pricing in more hikes to pricing in less hikes to pricing in no hikes and then pricing in cuts, and gold went on a rally. So I'm telling you, these are premium areas where markets are going to have that macro switch. And if you have any brain, take in what I'm saying. We're at a very key price point in gold on a higher time frame after months of outflows caused by rate hike fears and inflationary fears creating rate hike bets. If inflation starts coming down, don't you think gold is going to go up because of rate cut bets? The opposite will happen. It's as easy as 1, 2, 3. Say it with me. It's like ABC. Inflation goes down, rate cut bets disappear. Inflation goes down, rate hike bets disappear. And inflation goes down, rate cut bets reappear. That's all it is. It's a game. Rate cut bets are right here. Rate cut bets disappear. Rate cut bets are back, and markets rally. Markets are greedy. It's the same shit over and over. Exactly what we said. Wait for this pullback area. Don't be buying into here. You had that Trump headline come out. Sentiment was bearish, and then boom, you got that pop from here. It's the exact same play. No matter what you trade, I know you could be trading lean hog futures, you could be trading corn futures. It all moves the same. Every single thing that we watch out for affects the other.
Beautiful, man. Bro, what a beautiful CPI print. What a great spot on target you had there. Jeez, man.
Come on, man. That's how we do it, bro. This is how we do it. Like, look, last week I had my worst week of the year. This week it's sunshine and rainbows. But I was happy either way, dude. That's the point of it. It's the game. Like, you got to be in love with this game. And if you're not, you're just going to hate the downturns. You're going to hate the downturn. Bro, I brought 7K last week. I didn't give a shit about it. Like, I moved on like nothing happened. That's the point of it, is you don't get consumed by this. You make this a game. Like, the fact that it brings me, it truly brings me joy that we can come together as a community, analyze the financial markets, attack together, while everybody is looking for shorts on gold from down here. Guess who was looking for buys? Our community, man. And that's what's the best part about this, is we understand financial markets. We understand how to actually trade the economic data like no one else does. Like, the only reason we built this platform that does this for you, that breaks it down. Now look, NQ traders could go here and know this is very bullish for NQ.
Yep.
ES traders could go here, look at, wow, this is very bullish for ES. So I'm going to ride that sentiment in NYSC. Then maybe we get a pullback to here, retest, and then continue to push up into these highs. And that's what I'm expecting. I'm expecting ES to come right back up into here. I'm expecting gold. I'm expecting gold to here. Let me zoom out a bit. I'm expecting gold to go back up to this high over here, this intraday high. And whether that happens tomorrow's daily candle or whether that happens the day after, I'm good because I'm in from down here, guys. Like I have zero stress for this position. I'm letting this go. I took some profit up here at 4,100 just because it's a psychological area. We had a massive 1 minute candle, but bro, I'm letting this shit run because this is that first sight. This is that first sign I was telling you guys that structure is about to start shifting. Remember how we talked about that it's going to take some time for the structure to shift because there's going to have to be more than one event that happens, that takes place, that causes a shift in higher time frame and intraday structure. So once that structure does shift, dude, what do you think is going to happen? We're going to end up going to 4,700, 4,900, 5K, and then the same thing that we did here where we sold every single pullback. We're going to do the same thing here.
That's right. Trend is your friend, guys. Just keep following it. Know why it's there.
Yes, sir. Yes, sir. So exactly that trend is your friend, but you have to be able to anticipate these shifts in the macro regime. And that's why we're here. That's why market's here. Market's here to guide you, show you, hey, this is very bullish for US equities because lower inflation means cuts are coming. And if cuts are coming, we're going to be rich, baby. We're going to get rich.
Bro, what a drop, though. That's crazy. Last prior 4.2% now to 3.5%.
Yep. This is and this is that inflation. This is that oil reading from months ago, right? Like,
yeah.
You have to keep in mind this is this being translated into the markets. It's not this. This will come in too. You know, if we don't reverse this shit will come right back into inflation as well down the line. So we're pricing. This is what inflation's reading right now. These oil prices. This is where letting your winners run comes into play. Critical inflection point, technically now being backed by fundamentals. Exactly. That's why we broke it down here like this, because to show you guys, there's always a series of events that are impacting financial markets. And if we can just make sense of those events, guess what? It's eventually going to come into play and we're going to understand these shifts. Now, beautifully, look how beautifully we just rejected this area, right? Of course, we have likelihood of retracing, potentially retesting again. But the point being, we potentially found our low on gold. And if you can anticipate that, these upcoming data reports, we have NFP next month. Before that, we have the US interest rate decision, right? So we can even see like what are markets anticipating for that? You know, let's go a quick sneak peek.
Ooh.
What is the market pricing in for the July FOMC? So let's just wait for that while that does its thing. So gold, again, just retesting this. No clear signs of just continuation above. If we remain above here, we'll 100% just push up into 4,100s. So you could take that, but this is after a $770 1 minute candle, right? So I wouldn't personally want to take this. I'd want to wait for a bit more of a lower pullback, or maybe even break this low and then snap back above, something like this.
Yep.
Something like this. Or if we go down to this area, I'd look for these buys because of that sentiment, because now we are pricing in those rate cuts. Exactly how we talked about, this is very bearish for the dollar. Now, if I open up the dollar chart, what do you think is going to happen there? Wow, look at this. Very bearish for the dollar. Screenshot this, guys. Screenshot this, post this, send this to your grandma. She's going to love this. but this and guys, like, drop a W right now. If you're having fun, if you're learning from these streams, drop a W in the chat, because we're really breaking down fundamentals and macroeconomics. And I don't think there's anybody else who's doing it like we are. I really don't believe that. I think it's very monumental what we're doing, and it's very special because there's no other trading platform that does this, that builds a feature like this, shows you how to use it in real time. Like, I hope you guys understand how powerful this is, right? Oh, I just found a bug. But I hope you understand how powerful this is, that we can go to here, we can check out what the actual playbook is for the asset I trade, for the market I trade. I trade gold. I'm in gold buys. I look here, fuck, this is very bullish. And then I went to the chart, massive 1 minute fuck you candle to all the sellers. That's how easy we made it. Where this data report, Forex Factory tells you it's red. Red for what, buddy? Like, what do you mean red for what? Red for NQ, red for dollar, red for ES. But we know this is bad for dollar. But what the fuck does this mean for US equities? What does this mean for Euro USD? What does this mean for USD JPY? Like, how do we translate this figure into what it means for what I trade? That's what none of these other platforms show you. None of them give a shit about you as a user. I'm telling you this from a wholehearted because I have reached out to a lot of these platforms as a user. None of them take feedback seriously. That's the reason why we have such a high standard for our users and for what we do and what we push out to our users. If we can build features like this, there's no reason why Forex Factory, who has existed for 2 decades, is still using this, because Forex Factory's main purpose and main source of income is ads. That's why they make money. They charge you $80,000 a month for an ad like this, and that's how they make their money. They don't give a shit about users, right? So this movement happens. You break this down. You understand sentiment, and now you can ride this going into the incoming daily candle, right? So you know that you could take advantage of this as well. Sorry, one second. I just got to reply for work. Kevin, do you want to just take over real quick?
Yeah, for sure.
Thanks, man. Appreciate it. Sorry, I just had some work questions.
No, bro, you're good. You're good. I'm with you, man. I'm looking for a nice pullback. You want me to take you off the screen or?
No, that's okay.
Got you. Crazy. Look at the reaction to on our Fed decision in July. Look at the spike we had here. We went from I believe it was see if it'll tell us, 35% chance of a rate hike has now gone down to a 10%. A huge drop there. This is very bullish. We also know, right? We go over the playbook. We cover it almost every day here in Market in the Morning. When we have our minimum and maximum, we look for us to break and try to get out of that range, right? Our minimum was 3.6%. We broke out of that range to the downside, a lower reading. We're expecting a trend day when we get that type of reaction. So if you weren't in it for the big move, don't be beating yourself up. Don't think markets aren't going to give you an opportunity. They are. Don't chase it. Just stay patient. You will get that opportunity, and then you will take the trade. But we know that we're staying bullish today because of that economic data.
Can I, sorry, interrupt for a second?
Yes.
Can I just share my screen? I want to just quickly see. So we did get a change in bias on gold. From overnight, we were bearish. Now we have soft US CPI print lowers oil adjusted inflation. June CPI and core measures came in below forecast, easing inflation. Fed tightening odds fall as traders July hike bets. This just updated just now, which is crazy to see that even this pops up. This is something new too. So we're adding these interactions that you guys can clearly see. Like when something big happens, you'll see this, what happened. So it kind of tells you, click this to figure out, hey, what's going on here right now, right? Like what just happened, what took place, and then it'll break it down for you. Like, oh, soft US CPI data sparked a sharp gold rally on falling rate hike expectations. Guys, come on. This is as easy as it gets. This is easy as 1, 2, 3. Now, gold is pulling back. Remember what we talked about, waiting for some sort of retracement, maybe even push below here, take out these lows and then push up, or a better buy would be from 40, 50. But that sentiment's pretty clear right now, right? I hope hopefully that's making sense to everybody. Sentiment's clear. GC continuing up. I'm expecting bulls on US equities again as well, on NASDAQ and ES going into this session. Maybe even like, dude, even if this move got corrected and we came down here, I would still take that buy. Like I would still take the same buy over here, or continuation on a retest above this price point that I have marked up here, just because this is like over here. We can look for something like this here. But yeah, that's what I have in mind. Kevin, what about you?
For long, were we looking for longs on gold?
I'm looking for longs on gold. I'm looking for longs on ES and Q for the coming session. Gold, I would like to see a bit of a retracement as I was talking about, and so we'll just watch that price action print here.
Yeah, no, I'm definitely with you on the longs on S&P right now. I don't know. I'd like to see how we react in this little, use little volume shelves as imbalances, right? So a low volume area right here is a pullback zone. I'd want to see how we hold. Given the fact that we had such an out of expectations report, I'd want to see us hold a lot sooner than later for that follow through, right? So just something to keep in mind. I do have an area on the higher time frame on NASDAQ over here that we've reacted to a few times. But again, when we have the catalyst behind us, all that's doing is supporting that we're going to break it. So I do want to see us continue. I like where we're at on the S&P for a possible pullback over here for some longs. Stops near 75, 73. Target new high of day. We could see if we want to push into this area, which it looks like we're going to right now, how price reacts to it. Do we get, it's called absorption, where buyers step in and have more buying pressure than selling pressure? Do we happen to break through it, head towards that data low, and then reverse? But either way, not looking to short this market. That is for sure. 100%. Gold, would also like to see it pull back here. Anywhere really, just waiting for the reaction. Not going to force anything, just going to let markets come to us. We know on the 15-minute time frame too, things are very strong to the upside in this general direction, in this trend. So it's really, in my opinion right now, it's a matter of waiting for those pullbacks, waiting for those areas of interest. I like where the ES is right now. I think gold might have a little more ways to go for a pullback. What level are you looking for on gold?
I'm looking for on CFD. I would like to see either a break below this area, excuse me, where we currently are. And then if you just open my screen for a second.
Yeah, let me get you.
Yeah, something like this, man. I would really like to see us retest either this area. This is valid for me too. Or if we do something like this, where we push a bit lower, and then when we come back above, like so, even like this area is valid. Like once we snap back above is also just because I understand like how a price can react. Sometimes we could easily come back, correct 50% of this move, maybe not even touch the 50 mark, and then just continue towards the upside like that. You know. Yeah. So just anticipating, but we know that, but what we do know is that sentiment is pretty clear. We completely understand what this means for gold. So we know it's bullish. It's very bullish. It's just a matter of where does price bottom out? Where does that price bottom out? And where can we see us probably buyers testing that area again? Yeah, gold is, that's a good point that Seb made up. Gold is at that point from the start of the week where we had sellers jump in, right? So it's interesting to see how this area plays out.
Nilab, can you check NASDAQ? Neil, you trade NASDAQ?
I don't. I trade ES though. Like that's,
okay.
Yeah, I trade ES. I mark up NASDAQ, but I don't trade it.
Here, gotcha.
Just update this. All right. So what I personally see is it's just the same sentiment, right? I wouldn't personally look to buy NAS here. I would like to see it pull back down somewhere here, maybe even lower. But unless you're pre-positioned, dude, I don't want to get into U.S. equities right now.
No, I'm with you. It's patience on this
patience, front right now. Patience. Like that's why it's better to position yourself anticipating a lower CPI off of a daily support, knowing that lower CPI is gonna happen and that it's gonna push gold up. It's just a matter of how low does it come. And to our luck, it just came out right at below the minimum expectation. So that's just luck, right? That is purely a luck. No one's predicting the print here. We're just preparing ourselves for what the number could come out as. Number came out below the minimum expectation of 3.6 at 3.5. That's very bearish for dollar, but it's bullish for gold. So that plays perfectly into my gold buys.
Beautiful. Kevin Nalab, what is your experience trading futures for CFDs? I know you mainly trade CFDs.
Yeah, dude, I've always just traded my personal capital. I've never traded props. Yeah, I've just always traded my personal capital since I was 19 years old. And nice. I've just grown that, and I've just always traded CFDs. So I don't personally have any experience in trading futures, but they're the same underlying asset. Like you have to keep that in mind. It's the same underlying market. Gold futures, gold CFDs, there's nothing different besides the price. The price differs a bit. Structure is the same. Structure is relatively the same, but it's still the underlying market. Anything that happens to gold futures is going to happen to gold CFD. It's going to happen to gold ETF. It's going to happen to gold miners. It's all following the same underlying market, right? Same thing as if you trade SP 500 or ES. If you trade SPX, SPY, it's the same underlying market. So regardless of what it is, sizing, pricing, prices are different, but that's all that matters. Like that, everything that makes a difference is the same. Like what's actually
Yeah.
impacting your market is going to be the same, and it's going to move the same. So gold pushing down a bit.
Yep. Yeah, nice pullback.
Everything has equal weighting in terms of Fed interest rate decisions. CPI, NFP, geopolitics, they all influence it. If things are influencing elements that impact monetary policy, like oil prices clearly impact inflation. So if the war is ongoing and it's escalating oil prices, inflation won't come down. So Fed won't touch it. So Fed won't touch rates, right? It's a story that comes together when you understand all these points, right? Looking at one thing more than the other doesn't make more sense, right?
Right. Great point. Great point. Guys, it's gem season, baby. We're dropping gems left and right. Make sure you guys run that like button up. We want 100 likes here on YouTube today. You guys are a phenomenal audience. We know you guys want nothing but success, and that's why you come back to Market in the Morning every day.
Sure. Every single day. We do this every single day. Like just think about how many data events we have traded and called it out. We called out NFP last time, the time before that, right? The buys from NFP were called out by Kevin and Imri. We called out these buys ahead of time. Dude, we called these buys out for CPI from last week. I said CPI is going to be buys. I told you guys. And it's not because I'm a cocky individual. It's just, dude, like this was clear to us. Like we explained, I dumbed this down where a chimpanzee could have come and he would have clicked buy on gold, you know? So point being is that this isn't, we're not predicting anything. We're using information that we have at hand. We know we know these numbers, these ranges exist. Okay. Now we can build playbooks out of it. And then we can follow those playbooks. 3.5 bearish for dollar, bullish for gold. Yes, it's just conviction. Excuse me. This is just conviction because I've just been watching and practicing and doing this for years. Right. So naturally, that's just bound to happen. The more you do something, the better you get at it.
Yeah. That's it. Come get those reps in, right? You don't go to the gym and expect yourself to be swollen a day. You got to get reps in.
Yeah, like you have to fall in love with trying. If you don't fall in love with trying, the hardest part, which in trading is getting profitable, will be fucking miserable to you. Every loss you take will be miserable. Every setback you have, every tilt you go through will be absolutely miserable because you don't love trying. Me, dude, I could lose 20 grand this week, and I promise you, no one would notice it in my mood. No one would notice it in my mood, how I do my work, because I don't give a shit, man. It's literally follow one principle in life, and is that money comes, money goes. The less you care about it, the more you'll have it. And that's with anything in life. The more people try to succeed, the more they push themselves further back from it. You got to let go, man. You got to let go, focus on what you got to do day in, day out, and let that shit happen. Because I promise you, the day you let go, the day you actually surrender, 3 months from then, like your life will be absolutely different.
Yeah.
So always keep that in mind, is that if you can, Vincent Van Gogh said it best. He said, I dream my painting and then I paint my dreams. So just think about it. Think about where you want to be 6 months from now, what type of new paradigm you want to be in. And you have to grow into that role. When I first started market, I was not ready to be a founder. I was like, I envisioned in my head, I'm like, what does a founder do? What does a boss actually do day to day? How does he move? How does he act? What do his people rely on him for? And then you have to become that person. It's the same thing. What type of trader do I want to be a year down the line? Do I want to be a trader who's completely monkey brain and takes a buy stop, sell stop on CPI? Or do I want to understand what this data outcome actually means for the market that I trade and use that information and then go to the market I trade, look at it, be like, okay, you know what? We just had a massive spike. What I'm not going to do is act like an idiot and enter buys at the top here.
Yeah.
I'm going to instead let the markets digest, map out potential scenarios, and then execute, because I now know that we're bullish on gold, we're bullish on US equities, and we're bearish on dollar. So I'm going to ride this sentiment, whether that's right now in this session or whether that's in the next daily candle when sentiment is fresh and markets have let the noise and dust settle. But this is what I was talking about. Now, if we start bottoming out over here, what I would watch for is you'd want to see some sort of price action like this, where you bottom out. And then once we snap back above here, you'd get that continuation to 4,100. If this doesn't play out, again, if this doesn't play out, these are much more valid buy areas. But this is just something to watch out for. I'm personally not going to enter these buys because I took nice profit on half of this position, and I closed my entire position from here. I'm letting this one go. This is a prime runner that I feel confident in letting go. I don't care where it goes. If it gets stopped out, the point being is that I'm aligned with my entire thesis that I've been explaining to you guys for the past few weeks, that as soon as gold comes over here, markets are going to start pricing in those rate cut bets. And I'm confident in my thesis because, man, I've rode this shit up before. I know what it's like. I completely missed this move, by the way. I'm telling you this from experience, is that I was the guy shorting into this zone. Okay, this was 2022. This was 4 years ago. I'm much more smarter. I have more market maturity. I have more money. I'm more confident. I have more conviction because I studied this shit, man. I studied the markets every weekend. I don't take a break from this. So the fact that I was shorting into this when rate hikes were over and markets were starting to price in cuts, and I completely missed this triple bottom on daily, I'm not missing that shit now. Best believe I'm going to be riding these gold buys all the way back up. Now, that doesn't mean gold's not going to sell off again, right? Like this area can get tested multiple times before that sentiment for that shift is actually set in stone. Now, let's start theorizing. And this is, guys, I need everybody to pay attention right now. Oh, man, this is going to get heated. I have a meeting in a few minutes, but I'm going to...
Oh, you cancel it. Move it back.
I'm going to push it back 1 second.
We only got 440 people in here this morning in the lab. You got to push that back.
Oh, man. Okay. I pushed it back. I pushed it back 30 minutes. So,
bro, the power of the CEO.
So it was a one-on-one, with someone on the team. So see, this is what I mean. If we start now getting a double top or pull back into, like, snap back above into here, you're going to see that continuation into 4,100. Okay. Now, what I was talking about, let's start theorizing when that actual sentiment is going to be set in stone. Because right now we're getting clues, right? These clues are coming in. We got a bad jobs report last time. We had inflation come down now. So these are little clues that are pointing towards rate cut bets. And just like how oil is coming down, that was a clue that points towards lowering inflation and that rate cut bets will eventually come. But there still has to be that one catalyst, that one event that sets it in stone, where then the markets are like, oh yeah, fuck this. Let's just rally now. Just like how that moment was August 22nd, 2025 at the Jackson Hole Symposium. If I go to market over here, I go to backtest fundamentals. I know you guys are probably sick and tired of showing me this, but there's 400 people in here, man. If I don't show how crazy of a feature we've built, you guys aren't going to understand what it truly means to have to build the best market research platform. So this one candle created sentiment for the next 6 months to come. And I'm not exaggerating. If you want to go backtest this, don't take my word for it. I also wouldn't listen to a random guy on the internet if this is my first time. So Fed Chair Powell signals possible September rate cut, boosting gold demand, right? Fed policy pivot towards easing increases gold appeal as a non-yielding asset, okay? Now, keep in mind, that was that pivot where the Fed went completely like, yes, this is the start of the next series of rate cuts. And boom, within 5 weeks, gold rose 30% in value in 5 weeks. What market does that? Tell me, like, what market does that? Now, we haven't had that pivot yet. Remember, they were still talking about hikes, that inflation is going to remain high. Now oil is also pushing a bit higher. So that pivot isn't fully there, but we're getting clues, is what I'm trying to tell you, is that the story is being painted right in front of our eyes. And if I'm like Sherlock Holmes right now and I start piecing these clues together, even if I have 60 IQ, I can figure out that this points towards rate cut bets eventually. I'm not saying they're going to happen now, right? For all I know is that two months from now, inflation could come out hot because of oil prices, and then we're back down here. I'm just here to anticipate what could potentially happen and how I could position myself. Like I told you guys going into inflation data last week that this price point, if we come down here, I'm going to buy going into inflation data because of I know it's going to come lower than forecast. Those lowering oil prices are going to trickle into the inflation, bring it down, and gold's going to push up. Exactly. Jackson Hole Symposium's next month. That's why I brought up this example, is that just like how we had a pivot there, don't you think it's possible we have that same pivot at Jackson Hole Symposium? Like, don't you think it's all possible? All of this plays out exactly as I'm saying, and that's why I have a smile on my face, cheek to cheek, because I'm so confident in this, and we're gonna make a shit ton of money together. Like that's what I'm excited about. I'm excited about the next 3 months where we're taking these gold buys and really riding these up.
There you go.
Yes, exactly. So that that's a good comment. Can you bring that up? Wait, wasn't it August 23rd, 2024, and the cut wasn't okay? So 2025 August here. So cut started before that, but then they stopped cutting. They stopped cutting for months. That's why gold consolidated from April 2025 after those rate hikes the tariffs got priced in. After that, gold consolidated, waiting for the next catalyst. The next catalyst was the Fed pivot, talking about those cuts that they were going to bring. The reason they weren't cutting during this time was because of the tariffs, because they kept talking about tariffs, inflation. So tariffs, and then they came out here, oh yeah, Fed policy pivot, easing. We don't need to hold anymore. We're going to start cutting. And then they cut rates 3 times. The first rate cut wasn't even until September meeting. Weeks after this pivot happened. Markets are always front running. Markets always move on anticipation. Why do you think US equity markets completely topped off before Trump even came out on Liberation Day? Liberation Day wasn't until April. The markets topped off in February because they were anticipating Trump tariffs. He had been talking about it since November. Why? So markets move on anticipation. Markets bottomed out before Trump even took the tariffs away. Markets bottomed out over here before Trump came out with the 2-week ceasefire. If you want to backtest this, let's quickly do that. But everything moves in anticipation. The markets are always forward looking. As a retail trader, if you're now just trying to understand what the CPI print means, bro, you are miles behind of what we're doing here. And I'm not singling anybody out. I'm just saying. So Trump announces a 2-week ceasefire and peace progress with Iran. And this was on April 7th. Wow. When did the market bottom out? March 30th. Because they know Trump is a taco guy. He's gonna walk this back. Do you think the market's gonna sell off more than 10% from these lows after right here when they know eventually Trump's gonna come out and be like, hey guys, ceasefire, because oil's also sitting at all-time highs, and it's the same thing. That de-escalation happened because oil was sitting at all-time highs. That de-escalation didn't happen because, they just wanted to stop bombing each other, right? That oil de-escalation and that ceasefire clearly happened because Trump couldn't stand U.S. equity market being at lows, and they couldn't stand oil being at $110 a barrel, so they brought it down, and they brought it down all the way back to 70 because of de-escalations. This is macroeconomics, geopolitics broken down so even a monkey could understand it. Not saying you guys are monkeys. I'm just saying a monkey could understand it. So again, same thing playing out, guys. Look, so if we start rejecting this area now and we start pushing up, you want to see a double bottom like this, exactly how we mapped out while we were creating this low. And then that would be like if I was a scalper and I'm looking for buys here, I'd be a bit careful. I want to close above 75, just at being like a psychological level. And then this would be more like your range for your scalping, right? This would be your scalp range. I would love to see more of like an intraday play from here. But I also know that this sentiment is fresh in stone. So once this noise and dust settles, that this scalp could easily play out, and this could extend further into here. So that's just further something that if you guys want to look out for, that's what I would be watching if I was looking to enter post data, because you have to keep in mind, this is post data. This move, this sentiment happened. It's now in stone. Markets are digesting it. This can easily even come down to here, but once the noise and dust settles, the sentiment continuation is going to take place. Whether that's now, whether that's 3 hours from now, whether that's 2 days from now, whether that's the next Asian Pacific session, all that's going to happen is that the same sentiment that took place because of the CPI reading, where CPI came out bullish for NQ, bullish for US equities, bullish for gold, and bearish for dollar. that's going to continue because it's fresh and this is a fresh catalyst.
Beautiful. Guys, man, run that like button. We're already at 70 likes. You guys are amazing. You know our goal is 100 likes today's stream. The lab, man, you're on fire today. You need a cup of water, bro? You're on
Dude,
fire
I made a iced coffee for myself before this, and I have not even touched it, dude. Like, I'm so excited. I love this, man. I love when we are able to theorize something
Yep.
and that it plays out. And remember, markets are a game of probability, but we talked about the probability of this happening. It's about mapping these scenarios in life. And listen, I'm someone a lot of people are gonna think I'm crazy from what I'm about to say. And it's not crazy. Like, hear me out, okay? So I'm someone who thinks about every possible scenario. I'll be outside, I will see a random guy and I'll randomly think, if this guy was to attack me, how could I take him down? I'm thinking of every possible scenario so that way I'm safe and I'm aware of everything that's going around me. I call it my absolute masculine instinct, ancestral instinct that I have. I'm just always looking at. I even have a plan. If someone was to break into my house, how would I attack them at 3 a.m.? Like, you know what I mean? I'll jump off my staircase, knife out, like straight like Superman. But anyways, it's the same thing in the market. I like to come up with these roadmaps and these scenarios so that when this plays out, I'm not caught off guard. I know what could happen. If gold was to come out, if inflation was to come out high and I get taken out and that opposite play happens, guess what? My stop loss at break even isn't going to be break even, but at least I'll get taken out. It's fine. But the point being, I know we'll probably just push into here, right? It's about having this roadmap mapped out so that when things happen in life, you're not caught off guard. That's the reason why people say, why your parents used to say, oh, you should save for a rainy day. So when that rainy day does come, you're not left out of the blue surprised, like, oh shit, I have nothing in my piggy bank for this rainy day, right? And I'd rather have these scenarios than sit on my ass just waiting for the data to come back, right? You don't want to be the person who's just hoping that your buy stop gets hit and you get pushed up, right? You want to be the person who comes to the markets with a plan, and that plan could be 7 different scenarios, but objectively understanding that I'm going to wait for these 2. And if these 2 happen, I'm going to execute regardless as how price action looks. Don't you think if I'm entering a buy here after seeing this sell move and I have 50 people commenting on a video I posted, gold's not going to buy, there's going to be no buys, don't you think I would get shaken out? No, but it's because I have conviction, dude. Like, I have conviction. I don't give a shit what these Tweety Bird people say on Instagram. The point being is that even if the opposite side played out, I would be the first one to tell you, guys, this is bearish for gold. It's bearish for NQ because of how the report came out. Is that what I theorized isn't playing out? But I would have mitigated my losses because I'm pre-positioned for CPI. I'm pre-positioned on how to take advantage of gold with intense macro regimes. So now that our CPI buy is running deep into profits, and we anticipated this since the start of last week, I've been talking about these buys because inflation is going to decrease. Now, since this is playing out, guess where I can let this go to now? I can let this go to my higher targets, up here, up here, up here. And of course, we're going to get pullbacks. We're going to get those pullbacks. Maybe we'll pull back a bit here and then push up. But the point is that sentiment is fresh. If those buyers can maintain from these lower levels, then there's no way that we don't start shifting that sentiment unless there's some fresh catalyst that happens where the market completely reverses the CPI play and heads back down to here. I think we found our low for this week. Like, this is our low for the week, and I think we're going to trade within this range where it's an upside on gold up here and this downside. We would 100% need to break above this weekly area to our left where price opened up at. So as long as we can break above this 4,100, then we're good to go, right? But until then, we're still bullish. I'm not looking for sells in that case. Like, I just want to make that clear.
Nice. Beautiful. The King asks, I'm new here and trying to learn gold. Any tips? Bro, great day to be here.
Absolutely. One of the biggest tips is that you want to understand what side the macro regime is pointing on. So if I look at a market, I have the day trading bias here. I understand the recent soft US CPI print lowers oil adjusted inflation. This means that Fed tightening odds fall as traders exit July hike bets, right? So this brings rate cut back onto the scene, exactly how I have been breaking it down over here. That once those rate cuts come into play, this this movement starts taking place on the higher time frame. And this is just the first anticipation and that data report that came into play. So again, with gold, guys, we want to, if you're if you took like scalp buy, you want to make sure that this low is actually printing. If this holds, then you're good. Then you're good to ride these up, right? But if this doesn't hold, then what you'd want to do is wait for better areas. That better area would then be 40-50, also being a psychological level, and also then just riding that momentum off of these sells. Again, we had this push up. Markets are digesting this data report. Let the noise and dust settle, and then you enter. You enter when it's settled. Markets have calmed down, and maybe this price action prints out exactly how he mapped it out. But the point being that you let it settle. You don't rush into it. That's why I mentioned the safer one probably is when you get the break back above 40.80.
Yeah. Just wait. We saw the move. Unless you were in it already, you're not chasing it. FOMO is a hell of a drug where it'll make you go, oh my God, it's moving. The lab was right. We spiked up after CPI. I got to chase it now. No, absolutely not. You chase it. That's how you get stopped out 1,000 times. And you go, well, how come everybody on social media was able to make money today, but not me? Because everybody on social media has got their system, right? They're following their system. That's why they're able to post it on social media, because they're following it consistently. It's something that works for them. Build something, find something that works for you consistently.
Yes, sir. Absolutely. Build something, find something that works for you consistently, make it your edge, and execute on it relentlessly for the next 5 years, and gain that maturity using that system. Don't flop around dude. It took me years to become profitable, but there was not a single time in that moment where I was like, I'm gonna stop trading, or I need to rush this. It's the markets, adrenaline, FOMO, all these things are worse than crack.
Yeah.
I don't want to be a part of it. I don't want to see this massive move and then come to the market and start freaking out. Remember, the first thing I said, guys, was we're gonna wait for the data to come out. We're gonna watch it. We're gonna see where it lands in the playbook, and then we're gonna go to the market, not to enter, to see how the markets are digesting it. What's up, Marco, my boy? Dude, guys, Marco is one of the best traders I know in Toronto. This guy's a legend. You should 100% follow him at Marco Trades on Instagram. But Marco, glad you're here, bro. We're about to do a quick recap. So, guys, everybody watching, CPI, we've been breaking it down, came out below the minimum expectation of 3.6. 3.6 is what the institutions were expecting as the minimum. Came out 3.5, outside expected range, so expect higher volatility. Now I click this. What does this mean for dollar? Wow, very bearish dollar, because this implies that rate cuts are being priced in. I go to gold. Wow, this is bullish for gold. Would you believe it? We had that gold push up, and I told you guys that gold buy would play out purely because of the CPI play. Being from a higher demand zone, we had that gold buy, entries taken during Asian session, and we let it play. And now it's the same thing again, is that we're anticipating a continuation of this sentiment towards the upside on gold as well as US equities. Is I think once we get NYSE open, give or take a few whipsaws, even if ES was to come down to here, it's still a buy. Guys, this sentiment is very fresh. Now, if I go to ES and I want to check the playbook for ES, I can click this drop down and click ES. It's the same impact, because lower inflation implies rate cuts being priced in. And if it implies rate cuts being priced in, guess what? Any risk asset such as US equities, Bitcoin, are going to see inflows. Whether that happens from over here or whether that happens from this key level over here, all I know is that that's the sentiment. Once the noise and dust settles, gold's also going to continue chugging away. And that's exactly the thesis that I was breaking down for you guys over this course of this path, is that we had those rate cut bets being priced in here. Then you had Trump tariffs plus rate cut bets being priced in here. Then this war started right at the peak over here. Okay. Why do you think gold topped off here? Gold topped off right when the war started because of inflationary fears. The price of oil was going up. That meant inflation also goes up. If inflation goes up, they're going to price in. What are they going to price in, Kevin?
Rate cuts, hikes.
Rate hikes.
Inflation goes up, hikes. Yep.
They're going to price in rate hikes. And if rate hikes get priced in, gold goes down because dollar goes up. And that's why you saw that dollar rally because of those rate hikes being priced in. And now it's the same opposite thing, is that if rate cuts start getting priced in, dollar is going to get devalued, the same devaluation that took place here, right? And then gold's going to see those inflows, and eventually a quarter, 3 months, 6 months down the line, when gold is back chugging bullish, y'all are going to come back and be like, Nalab, you were so right. You were so right. How did you anticipate this? Because motherfucker, I pay attention to what happens on a day-to-day basis. I'm here in the trenches on a daily basis, executing based off of this. Now, if I know that a catalyst like that is needed, and CPI is just one of the first clues that we're getting that are pointing towards this change in the macro regime, all I need now is just one more catalyst, a few more catalysts that can really shift this structure into a complete bullish trend. So just like we talked about here, August 22nd, 2025, this 1 hour candle right here, where that pivot happened. And that pivot then created the sentiment for the next 6 months, where gold went from 3,300 to 4,400, right, in October, in 5 weeks. And then it continued to 5,600 with the same sentiment. Okay. So this pivot happened at the Jackson Hole Symposium, where Powell came out and said, guys, we're fucking cutting. We got cuts planned, first one coming September, and then came 3 more cuts. So if this happens, and I see this taking place, and I know that Jackson Hole Symposium is next month, don't you think if inflation was to come down, if labor market was to show some slack, if the price of oil faded this entire escalation that currently took place and we started coming back down, right? Let's say price of oil fades this out, the escalations get faded out, just like how all these escalations have, and eventually we come back down. Don't you think that at Jackson Hole Symposium, they're going to be like, hey, yeah, we might be cutting down in the next 2 quarters? Absolutely. But what are the markets going to do? The markets are going to front run this move, because the markets always front run it. This is when Powell said they're going to start cutting. The first cut didn't happen till end of September in that cycle, right? We paused from when Trump came out with the tariffs in 2025, April. Fed paused cutting rates because they're like, oh, we don't know about tariff inflation, blah, 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 blah. And then they started cutting again, but the markets front ran that for weeks before the first cut even happened. It's the same shit again. We just had a massive sell-off because of these 2 factors. Iran war inflationary fears, creating rate hike bet fears. And if that happens, that's the same thing that happened here. The Fed was hiking, the markets, gold came down. Gold bottomed out before the first cut even happened, months before it happened. Yeah. Gold bottomed out. I missed this bottom here. I am not missing it again, my friends. Whether gold pushes to 38.90, this is still a valid thesis. You have to keep in mind, I'm looking at positioning. I look at positioning, how institutions are positioning themselves, and I execute on the intraday time frame. I took this trade on the 1 minute time frame, but it is off of a theory of how markets are going to play out over the next 2 quarters, because I'm focused on macro positioning. When you're aligned with macro positioning, you can take advantage of moves from here to here. You can take plays and shorts and ride every single pullback from here all the way down here. And it's the same thing when that buying momentum takes place. I'm going to be riding every single pullback to push towards the upside.
Beautiful. Nalab, looks like we do have Kevin Warsh speaking. If you go to the economic calendar and for filters, you put none on.
Yeah, I have 10 a.m. Yeah, he's speaking at 9 a.m., right? Or 10?
10 a.m. Yeah, testifies before the White House Service Committee hearing the Federal Reserve semi-annual monetary policy report.
Yeah, and he's speaking on artificial intelligence. I don't think he's going to say anything like, sorry. This one over here. That's why I feel, yeah. Yeah, I don't think he's going to say much. He's definitely going to say, "Oh yeah, we're going to watch inflation, data dependent." Dude, it's the same script. Especially after inflation came out, he's going to be like, "Oh yeah, inflation came out, but oil price is still high. We're going to wait, data dependent. We don't know if we're going to cut. We don't know if we're going to hike, blah, blah."
No forward guidance.
I'm telling you, no forward guidance. That's going to be his play. Also, gold's playing out with our little scalp that we were talking about, planning out right here, that I called out not too long ago at the guys, that low. Like, keep in mind, I drew this drawing when we made this 1 minute candle. So this exact thing is playing out right now. If you guys took advantage of this, fantastic. Brother, there's been escalations happening all the way since gold was at and I'm not being sarcastic here. Like I'm genuinely explaining a story right now. We've had escalations on the war front since here. So what have we seen happen over the past few months is that the price of oil has come down.
Yep.
Every other market and how and what is going to happen to inflation expectation depends on the price of oil. So if the price of oil pushes back up into 90s and hundreds, there's escalations are holding weight. If the price of oil gets faded out and this push gets faded out and you start trending lower, those escalations are not holding weight. Price of oil will tell you everything on whether the escalations are holding weight or not. And then what happens to the price of oil then trickles into inflation, and then it impacts every other market and inflation expectations. So with this data that just came out, let's pay attention to this sentiment right now. Let's not get lost in escalations that took place on Sunday and get blindsided by that. Let's focus on this fresh CPI report, which I told you guys was the main catalyst for the week, that this was going to determine positioning for the next week or so until we have the FOMC interest rate decision on July 29th, right? Is it 29th or 28th?
20, whichever one is Wednesday. I want to say 29th.
29th. Yeah, 29th, you're right.
Yes, 29th. And guys, we'll be covering it here. Market in the afternoon for that one. We'll probably get Imre on. We'll host it. It'll be a fun show. That last one was a banger. This one's going to be just as good, just as important, even more important, really.
Yeah. I'll also come on. We'll call it a few trades.
Hey,
our last FOMC trade was a banger, bro. Like that, even during FOMC and post FOMC. Post FOMC was insane. Like this. Yeah. Like we milked the shit out of this intraday trade post FOMC. And this is when sentiment is very fresh. How we had this pullback on gold, right? This was a technical pullback. Plus we had peace deals. And then they're like, guys, we have a tighter policy plan for later this year, potential rate hikes. Boom, market sold off, complete change. And then we filled the range. Wow. Guess what just happened? CPI came out. What do you think's gonna happen? We're gonna fill this range. Hope you guys can see that I'm not just talking to a wall. Like I hope you guys see this happening, and the fact that we're going to push into and fill this range. So fantastic plays, buys taken from here, buys taken before CPI, anticipating this move, because that's what we do. We break things down, we analyze, we create these scenarios, we execute, and then when people come and say, "How'd you get that right? How'd you get that right?" Because we dialed in, we locked in, man. We locked in for 8 years. You know, so guys, I'd appreciate it if you guys go to Twitter, go to my profile and watch this video that I dropped a few weeks, 2 days ago on how to prep for CPI. Okay, I talked about what's going to happen. And drop a like, Kevin. If you could drop this in the, I want you guys to explode this video, please. Like this video deserves 100,000 views on it. Like it was 1 minute 36 seconds. I made sure that I made this enough for your attention spans, so you guys wouldn't start scrolling on TikTok or Instagram 30 seconds into this video. So hopefully 1 minute 36 is now technically this is considered long form content for most people. So go watch my long form video, drop a like, leave a comment. Gold buys are playing out. Fantastic trade, guys. Fantastic trade. Played out exactly as we anticipated. And just thankful, very thankful for this day.
I'm getting that link right now.
Thank you, man.
For sure. Oh, did you send it to me over here? Oh,
yeah, in the private chat. Again, see, there's this area. So we got that rejection of here. This is where ES buys could start playing out. Is that if we remain above here now, this area, this is where those buys start playing out, and you get this extension towards the upside, and then stop loss just below here. So this still is like a clean 1 to 4 risk reward setup. And where you want to target that is my upside target up here, this range fill towards the top over here.
Nice.
And I'm still in these buys too, from the buys from here. So I'm still riding those up from the intraday from last week.
Beautiful. Yeah, I'm waiting on New York session to open. I'd like to see volatility step in a little bit on New York session, give ES a drop lower for a moment, give us a good buying opportunity, and take it back with that trend. Remember, guys, we do not want to fight that today.
Yeah. And it's still open. So if you're a scalper and let's say you took it on the top of this key level or anywhere here, just have a stop loss below here, because if we spike down on open, I want to see how we react to take out these lows over here, test this area from yesterday, and then push towards upside. So some sort of liquidity sweep, and then we can look back on gold. Gold is just merely chugging its way. It'll make its way to 4,100, guys. Trust me, it'll be there. It'll be there. I'll be the first to tell you whether you should hold this or not. It's going to 2,100. So sorry, not 2,100, 4,100.
Yeah, yo, right. Sure.
Someone clips me. They're like, this guy's an idiot.
This guy thinks gold's gonna crash.
But dude, like I'm telling you, when I was breaking this down, when I was breaking down my thesis for gold, and I'm not the only one who thinks this way, by the way. Like Kevin's on the same page as me, Seb TFX in the comments on the same page as me, Jeeves on the same page. Like we have some of the best macro minds that I know who are thinking the same way I am. So I'm not gonna fade all four of our opinions. You get what I mean? Like, even though like I saw this move down, I'm like, guys, we're literally just tapping into this discount buy area. Stop looking at everything as candles. Yeah. Look at things as price. If gold went from 5,600 an ounce to 3,900 an ounce, do you think it's a fucking sell? Do you think we're gonna go down to 3K based off of what fundamentals are gonna take us down, my friend?
Do you think
what is it, like a 17-month fair value gap that's left to be filled? Like, what's going on there? There's always a catalyst that's gonna take us up or take us down. Now, a random idiot on Instagram telling me gold's gonna go to 3,400 because his gut feeling tells him, bro, that's a reason why you're broke. That's literally the reason why you're struggling to pay for food, three meals a day at a nice restaurant. The point being, man, is that stop trading off of some random feeling that you have. Right. If you don't understand what's actually driving positioning on higher time frame and macro positioning, you're gonna get fucked up when that change happens. And that when that change occurs, everybody who was selling is going to continue selling, and no one's going to realize until gold's at 4,600, and then you're like, it's a bullish trend now. You guys see a trend when it's hindsight. Yeah. The point is that you want to be able to theorize these shifts that are happening. That's when you're not reacting. You're anticipating what could happen, and you're preparing yourself for when that shift happens. You know that every buy positioning now, I'm going to start holding my runners. And I'm going to start holding it because the chances of my buyers playing out for large, just like how my sellers were when we were selling in this regime, is the same likelihood now.
Yeah. Yes, coming to that support 75.70 area I'm looking for here, getting a bit of a reaction. Well,
this would be perfect, bro. This is what I was saying. So yesterday's buys that we were talking about from here, this is from yesterday, right? So this is the buys that we called out yesterday. When price was up here, me and Kevin said, do not buy. Then we had that Trump headline come in, right? Let's go to that right now. We'll go to high impact headlines. So I'm not in this, by the way. I put this up for people if they're scalpers. I'm looking for this sweep of this low. That's what I'm looking for. So I go to the high impact headlines, and we'll go to yesterday. I got to scroll a bit because there's always so much shit that's happening, especially on this war front. Here it is. So if I open up ES, right? Even where was it? Yeah, 1032 was the one. I open up ES. ES spiked down during that, right? ES spiked down, pulled back, and then we pushed back down again. I'm gonna hide this for now. ES pushed down. So ES pushing down right now. Just watch how we snap back above this area. But I would like to take out these lows, push down, and then we see that buying happen. That would be good. But so we had this out. We had this instant reaction in the 1 minute time frame because of this headline where Trump says Iran has asked so it was first escalations. He aims to address the nation, right? And then, this is 3 days ago. Where is the high? Here it is. Reinstating Iranian blockade, right? 23 hours ago, 10:17 a.m. That's when we had that headline come in right here, and then markets pushed down. And then we continued that sentiment to the rest of the day until we came to our discount buy zone that we were talking about in the stream yesterday, that's where we want to buy this area. We drew this little drawing out, and that's where those buyers jumped in. CPI just further pushed it to that weekly open price point where sellers took control. So again, that sentiment, just because we're below this area doesn't mean now it's going down. The point being that we're still bullish, that U.S. equities is bullish, that the U.S. equities comes down here, I'll be buying. Right? If gold comes down here, I'll be buying. If gold comes down here, I'll be buying. The point being is that the sentiment that we just saw is fresh and seen right now.
Yep. Beautiful. Beautiful. Banger. When will the market assistant be live? Eagerly waiting. Bro, I love how excited everybody is about it, man. That's awesome.
You want to be able to use this, huh? You want to be able to use this on my... Wow, what are the markets pricing in for? So, wow, I love this. Love that CPI playbook for gold. If I click this, it'll come up. See, it's things like this, guys. I'm very excited. We're working on a lot of cool stuff, and there's no one else doing it like this. There's no one else that can come up with tech where if I go to history over here, what are the most market moving headlines? What are the next three Fed decision dates, right? What is a day trading bias on gold? I trade NQ. Give me a prep for CPI. Here's my prep for CPI. Even in this prep, it said if it comes out lower than 3.6, NQ is going to be very bullish reaction, right?
Yep.
So this is that prep. This is that prep on how do I go from having a data report, seeing this high impact news. People are like, oh, fucking high red folder. I'm not going to trade around it. But brother, if you're in buys on ES and it plays out your way, why would you not want to know whether you can hold it or not, or whether you should manage your risk? The point being is understanding all this stuff can either help you get bigger wins or prevent you from losing in times of uncertainty, in times where Trump comes out at 2 a.m. sitting on a toilet, says he's reinstating Iran blockade. Like, this is what it's for. It's for your own safety in the markets. If you want to live to trade another day, don't be acting like an idiot. Understand what the data means. Understand what it means for the market you trade, because that's what's important, how this impacts the market you trade. CPI impacts everything. You could be trading Japanese bonds. CPI impacts it. U.S. economic data impacts everything, because the central bank of the United States, its Federal Reserve, the U.S. dollar is the global reserve currency of the world. It impacts everything. Business around the world is done in the dollar. Everything is transacted in the dollar. Shit gets impacted. People's daily wages get impacted. All of this trickles down into market movement, and we see it firsthand in the markets with reactions, right? So when you can think about this and then execute, because we know that this big candle means gold bullish because CPI come down. If CPI come down, rate cuts maybe. If rate cuts maybe, market love gold, market love US equities. And that's as Neanderthalic as I could explain it this morning.
That's great. Someone asked earlier, how do you know when the dust is settled? Well, now it has settled. Yep, absolutely, right? You got to let markets digest, right? When you eat something, you got to digest. When markets get that CPI print, they're going to give us that crazy volatility. We don't want to be caught in the middle of it when we know there could be a crazy pullback. We want to be patient, let the dust settle, let markets come back to a more normal price action area, and then we can take it from there. But don't be buying the extremes or selling the extremes.
Exactly. Like, you don't want to buy a high here going into the buy.
Right.
Right. You wanna buy something like this, exactly how I pointed out. Right, this I knew it. Like, I'm like, the noise looks settled now. Like, this is that low. This is what I was talking about, right? Even if you push a bit lower and you get this snap back above and you get the low printed, I'm all game for it, man. I'm here to make money. I'm here to analyze, execute, learn my lessons, take a loss, take a hit, learn another lesson. The point being, dude, it just all makes us more mature. All of this adds experience. Don't you think when you take a loss that you needed to take that loss? I think that's the best framework to have in mind, because it's like, oh shit, God wants me to learn something here. The universe wants to teach me something here. Me losing 8K, almost 8K last week, dude, in a span of a few days. Don't you think that I had lessons to learn there? Absolutely I did. And I learned it and I took it. And I'm like, fuck yeah, man. Next time I get presented with a situation like that, I'm not gonna get emotional, or I'm not gonna break out of my plan. The point being is that you take an objective viewpoint of the markets and your psychology, right? Dust settles, I want to enter a trade now. I don't want to enter a trade with my monkey brain. Remember that cortisol is going to spike up, that adrenaline is going to kick in. But if you can tolerate that for 10 to 15 minutes, you'll be much more logical, right? So that's the point, is that last year I took a big lesson. I took a massive $30,000 loss in a single day. And that taught me a big, big lesson. to the point where I'm not going to make that again. I made an $8,000 mistake last week because of a psychological mistake I made. I was anticipating these buys earlier, right? I got caught up in buys here. This took me out. And then when this played out, I was like, oh, fuck me. Like, so markets are always going to do what the markets want to do. But the best thing we can do is not tilt or not get emotional, objectively step away. So there's lessons in everything. But the best mental framework is if you take a loss, oh, fucking well, I have a lesson to learn. God wants me to learn something, and I'm thankful that I get to learn this lesson now, because an $8,000 lesson is way, way better than an $80,000 lesson. And I don't want to touch that type of mistake, right?
Facts, right? You want to be able to take losses in trading, as funny as that sounds, right? You don't want to be able to take a trade and think, oh, if this goes in drawdown, my account's gone. Like, no, you got to be able to take that trade knowing there's a chance that you're going to lose. When you have that mindset, it'll be easier for you to take trades without stressing. It'll be easier for you to hold trades to that full take profit, knowing that, okay, if it does reverse out of nowhere here, I'm protected. I know how much I'm looking to risk.
Exactly. Now imagine if I'm in this trade here, right? I'll move this arrows. Now imagine we're in this buys because we're scalping it. We're like, we know the sentiment is fresh. Why can I remove this? We know the sentiment is fresh, right, Kevin? And that we analyze these buys. We talked about it. It's a good play. Now imagine if this doesn't play out. And instead what ends up happening is gold maybe tops off, maybe does something like this, fills your range, tops off, and then comes right down here and you get stopped out over here. Now you have two options. If you've hit your risk limit, walk away, take the L, didn't play out. Maybe this is the area where market rejects, and then we push up, take the L, lesson learned in that. If you're within your risk tolerance, you could enter another buy here. It's that sentiment, just because price action comes down here, doesn't mean that sentiment is now gone, right? That the markets are fading out the CPI play. It doesn't mean that at all. Now, if we were starting to trend below these key price points, then I would reconsider. I'm like, okay, you know what? Looks like markets have faded that CPI move. Maybe what we're going to end up doing is potentially doing a deeper retest into the demand zone, right? Maybe going even lower into here because maybe oil prices are remaining high. The tensions are remaining in focus still. But if it comes back down here and the market starts rejecting it, cool. Now I'm up at the batting base again. This is my second try. Maybe this is what plays out. I take this buy and this one plays out because I have high conviction, right? I have high conviction in this. And because of that sentiment, I have high conviction. And see, this is what I was talking about, is that once we get that snapback above, there's your ES buy. You're going to get this ES buy now. Like if we remain above here, this is going to play out because of that sentiment. So if you're in those, hold on. We had that.
Yeah, ES buy is looking solid over here. Nice.
Right? Yeah, there's that ES buy. Through. Yeah. ES buys. Let's say you're in this, you have an extended SL or something. I'm not in this. I was waiting for like down here, but I'm still in these ones from last week. So I'm still riding the runners from this, and I'm anticipating to go back up to here. So this plays out. You have a solid 1 to 3 risk reward. You can let this run, right? If on this snapback, we talked about it, that if this could push down lower, but if snapback's above, then it can push. Then we can continue higher. So you're in that gold continuing chugging away to 4,100. But that's what I'm trying to say, is that once you have that conviction, is that these candles and how they print, it can't shake you out, or it shouldn't shake you out, because candles are merely a representation for us as traders. Yes, they give us good context in what's happening to price, whether buyers are jumping in or not. But candles don't mean shit, man. Like at the end of the day, algorithms just look at price, right? An algorithm doesn't see a candle. All algorithm sees, like, don't you think so many retail traders just saw this massive red candle anticipating just a continuation sell-off, and then guess what happened for the next 3 weeks? Gold pushed up and created a new low. So candles don't mean shit. It's price. Because gold fell from 5,600 to 4,000 in a matter of few days, 5,200 to 4K. We did this in 13 days, and which was less than 10 trading days. Don't you think we're going to get buyers jumping in? No one gives a shit about how bearish it looks. Price is what makes a difference. No one cares how much gold was selling off. And I'll be the first one to say that. I've been selling gold since the start of the war. I got into that bias in gold here, 5,200. I've been selling gold since then. Don't you think no one gives a fuck about how gold was selling off here when we're at such an inflection point and we're getting new data? Let's lock in and understand that there's a potential macro shift happening right in front of our eyes in the regime, and we're just starting to get the first clues of it. If we get these clues, down the line, more data comes out. There's data every week. There's something happening every week that either adds to it or takes away from the narrative. If it adds to it, we're going to continue building that report card of everything that's added towards this rate cut bets narrative. And once our report card is full, you're going to see gold is already going to be at 4,500 by then. All right.
Yeah. Beautiful. Beautiful. Guys, VIX new low of day, confirming trend on ES to the upside.
Let's go. Let's go. Successful CPI stream.
Bro, super successful.
How many people did we peak at, Kevin?
We got 535 of you guys in here right now.
Right now, holy
Yes,
shit.
sir. Yes, sir.
Guys, thank you so much for watching. Just about what we do really, really quickly. We created a platform called MRKT AI. It is a market research platform. We show you everything that goes on in the markets. And it's not just data. It's how does it all translate back to the chart. When you come to an economic calendar, you should know how this report impacts the market you trade. I trade primarily gold and US equities such as S&P 500. So I know that a 3.5 reading is very bullish for gold, and that's exactly how it played out. I was already positioned for buys here. You guys can watch all the streams we do. We've been talking about this move for days. So this isn't just, oh, these guys just made it up. No, we've been talking about this. You can also go to the dashboard, get a full breakdown on your day trading bias, what's happening, what could flip it, because there's always things either taking away or adding to that narrative, right? So now I can go to ES, I can get a clear picture of what's happening, that ES is bullish, right? You can see that eventually we're going to continue to push up into our target, whether we pull back to our support areas or whether we continue from here, we're bullish because of that fresh sentiment, because soft June CPI eases inflation and Fed tightening fears. We have our headlines coming into here, and man, we just have so much stuff coming out. Here's a sneak peek. We created a natural language chat box that actually gives you widgets. So if you wanted to ask, what just happened to gold? What just happened to gold today? Gold. We can ask it that, right? And it should break us down CPI. We can even ask it to break down current CPI and what's been ongoing. So this is a test, by the way. This is right from my, what's it called? My dev environment. So if I go anywhere here, and this is one thing I want to show you guys actually, FOMC projections for the upcoming meetings in July onwards. So now watch this. So most chat boxes, and we'll also go to ChatGPT here, and we'll ask the same question there. Okay. So most chat boxes will just reply to you with a fucking boatload of text, right? So it's searching market. The market is overwhelmingly pricing no change for July 29th at a 94% chance with a 6% chance of hike. September gets more interesting, 55% for a hold, but 42% pricing in the 25 cents. So it's like this decreases, right? So these things are going down. And it's the point is that I can visually make sense of this. Now, if I want to get, explain the last NFP candle at 8:30 a.m. on gold, right? This is what starts to happen here. It scans our US economic calendar to find when the last NFP release was. Now it starts analyzing the 1 hour gold candle. It told us that it was on Thursday because remember, the Friday was a holiday. And here's the impact on NFP from that day, from July 2nd, the most recent NFP. You can see continuing claims edge higher, gold trading near 4,000 with downside skew from strong prior US data. So you can clearly see what impacted here and how this impacted gold. So instead of returning massive, who the fuck wants to read this, right? Here's another example. I do this same thing on chat over here. What happened to the 1 hour candle on gold at 8:30 Eastern on the last NFP? Let's see what it returns with. Now, every other trading platform in this space will return you the same text paragraph. None of these teams are there's one company who does it, but none of these teams in our niche, I'm talking about in my niche specifically, in market research, macro, geopolitical platform, people who do this cannot do what we do. Because we do it the best, we will always be ahead. We will always be 6 months to a year ahead of everybody else, and they'll always be playing catch up. So I'm most confident. Thank you so much, Marco. I appreciate the kindness. It's my entire point is if you're paying $50, $70, $100 a month to a platform, and you ask them a question and they give you 17 paragraphs for you to digest, and there's no visual representation that relates it back to the chart, I want you to tell me what platform that is. I will pay for your subscription for that month, and then I want you to cancel it because I'll give you a market-free subscription if you cancel that subscription right now. So hit me up if you're using any of our competitors. Hit me up, cancel your subscription. I'll give you a 2-month free market subscription to use, and you will 100% not go back because you'll see the big change that we have over these guys. All these guys will dump data on you. We come here. You could go to market right now. You could go to, regardless of what you trade. Do you trade NQ? Do you trade ES? Wow, you know that we're bullish because of the soft US CPI. And then if I wanted to click on a chart, if I wanted to click, let's say this candle, I can click it, analyze, oh, soft US CPI sharply reduces near-term Fed hike expectation, boosting NASDAQ futures. Boom, NASDAQ got that inflow. And what does our playbook tell us beforehand? That if it came out lower than expected, lower than minimum, boom, very bullish on NASDAQ. So everything aligns. Everything shows you how easy it is to understand data, how to understand headlines. And also, tune in tomorrow, guys. We are about to do a massive launch. We are launching our TradingView integration. As you guys know, we've been teasing this. You can check out your bias. You can check out what the bias on gold is currently, so I can see it's bullish. If I'm trading NQ, I can have my bias on NQ. I can have the live headlines here with the breaking news tab. I can also see the calendar over here. And if I click CPI, again, I have my playbook showing me that this is very bearish for dollar. You can also click any other markets here, and then bang, when you have the dollar chart open right here, and you see that CPI print come out, and then you have market showing you, wow, this is actually means it's very bearish for dollar. Guess what? How the markets are going to move. And this is a perfect representation of how easy it is to trade red folder news when everybody's using buy stops, sell stops. We're positioned beforehand. We understand what this sentiment means and now how we can take advantage of it in the sessions to come. I told you guys, I was going to buy gold at these lows before CPI, anticipating CPI to come lower. CPI came lower. It played out in my favor. I'm in profit, took profit, and then we entered this scalp buys because of that sentiment. So, Hey guys, did I see you're adding a market trading indicator? Been a market user for months now. Can't praise enough. Absolutely, man. We are doing our launch tomorrow for it. So, but if you're a market user, I'm gonna let you in on a little sneak peek, man. If you're a market user, I want you to go to the side menu here and go to the update section. Okay, click the updates one, and then you can see this. This was we beta launched it few weeks ago for our users. So you can actually click this link over here. I'll let you click it yourself, but this takes you to the extension page, and then you can install it. So if you click this, it takes you here. You can already see 800 users, beta testers are already testing this out, and they're using it. I'd really appreciate if you guys can leave a 5-star review. It really helps our grow on here. But yeah, this is the first real-time headline calendar as well as bias integration onto TradingView from a third party. So it is and by all means, by the way, guys, there is not a single economic calendar that exists in this space that is more powerful, faster, and more actionable than the one we have built, to the point where now some of the biggest calendar providers are not copying us. It is ruthless. It is a ruthless game, but I love it because I know the founders have accounts on market, and I love watching them snoop around. And that's just it, man. You guys can watch me absolutely shit on your platforms and my team absolutely kill it, to the point where you guys eventually will be bankrupt. Dude, the reason I talk like this is because I know these weasels watch what I do. They watch my stories all the time. They copy our UI. They copy every little move that we do. It's I know you weasels are watching. Like this, I'm talking eye to eye to you guys right now. You guys are not going to be surviving here for long. Is that I am not very optimistic on the future of trading tech space. I think a lot of these platforms have zero moat, that they're not innovating, that all they do is dump data on users, and eventually every user is going to realize that they don't want that they want a team, they want a community, they want a platform that listens to them, that they can click this here and type, hey, Nalab, your shit founder, your platform shit. And guess what? Nalab's going to reply to you. And I'm going to reply to you right away. Be like, what's up, buddy? What happened? You know? Yeah. So the point is that we're ahead of the game. So if you guys have any ideas on how you think this could be better, whether if you think you'll be the only one that benefits from it, I can assure you that there's probably thousands of people who will also benefit from it. A lot of the changes we make are driven from users. One of the special shout outs, a lot of the changes we're making coming into this next few weeks are from the HTL community. Like they gave us so much feedback over the past few weeks, past month and a half, that we had to go back to the drawing board on how can we make this platform 10 times simpler for anybody to use. And one of the things we came out with are you're going to start seeing these little micro interactions that are everywhere happening, like what just happened, and also as well as full integration that you can navigate through the markets yourself. So like what's moving gold right now, tomorrow's calendar, I want to figure that out. Like what's on tomorrow's calendar, how do I prepare for that? So once you understand what's on the calendar, then you can go in deeper and ask it a follow-up question. Now, oh, tomorrow's calendar, not much going on. What does this mean for gold? What does this mean for NASDAQ? Because that's what really makes a difference. Is if you go to a calendar, you need to understand what this means for your market. Otherwise, who cares? It's just a number. That's why every retail trader, 90% of retail traders only look at red folder news, and then they're like, oh, guys, don't trade around this time because we have red folder news. Like, motherfucker, don't you think you'd make more money if you just paid attention to what's going on in the markets, if you understood inflation data and how it impacts rate cut narratives, and then all of a sudden you're positioning yourself for the change in the macro regime? And then when people and your parents actually ask you about the markets, you don't sound like an idiot talking about taking out highs, fair value gap, or some random thing that you're talking about. You know what I mean? There's several ways to execute, but the point being there's one objective way to look at the markets, and that's macro and geopolitical positioning. If you don't look at rates, yields, and how markets are forecasting and expecting in the near term and long term for these main concepts, then you're going to be behind. You're not going to notice these shifts, that when gold is selling off at this point, then people are going to be like, oh shit, I should sell gold now. It's like, dude, we were selling from 3 months ago. Well, where were you? Why were you trying to buy gold? It's the same people that were saying gold bottomed out here are the same people trying to sell gold to 3K from here. Keep that in mind, is that these people are late to the regime shifts. Is these regime shifts happen when you understand how this data impacts ongoing policy. It's everything relates. It's one big story. Nothing is separate from one thing else. The same things that impact NASDAQ, impact gold, impact BTC, impact corn futures, impact the Japanese bond market. It's all related. If you're ignoring the big picture, you're ignorant. You are purposely shooting yourself in the foot. Now imagine this, dude. Now imagine this. If God gave me a brain and God's like, man, I'm putting you on earth so you can really learn everything, experience life, build towards what the life you want to build, love the people around you, grow as an individual. And then you look at God, you're like, God, fair value gap, that's all I need to know. And God's like, are you fucking stupid? I gave you all these abilities to understand the markets as a whole, to understand the discipline that you're in as a whole. And you look at me with your tongue sticking out, drooling, talking about a fair value gap. Like, come on, guys. This is the financial markets. Let's not forget about that part. This is the finance side of the financial markets. And if you're ignoring that, come on. Like, you should not be in the markets. I'm not going to be the one to put ill on here, but I'm just saying, God does not like laziness. God does not like ignorance. And if you're purposely saying, oh, just because I'm making 10K a month, I don't need to know this. Dude, do you know how stupid you sound? The fact that you're like, oh, I'm a trader, but I don't want to know about the markets. I'm someone who comes to it. I'm like, what don't I know? What information am I missing? What information is going to invalidate my thesis? That's the difference between me and you, is that I don't come to the markets with a one-dimensional view. I come to the markets with a multi-dimensional view, knowing what factors are influencing, where that shift could happen. I'm aikidoing the markets with like all these different forces. I'm playing karate with the markets. And guess what? Then we can catch plays like this, and we can also short from the top and every single pullback and ride that down. And then when you look at your quarter end statement and you realize, oh shit, I barely took any buys. All I did was sell this quarter because I was aligned with the bias. I was aligned. And I'm the first to say it. I tell you guys all the time, I don't do well in counter trend. It is, I don't do well. So these buy rallies, I sit out. I just wait for the sells to set up again. And that's what I did every single time on Market in the Morning. I told you guys, I'm not taking this right now. I know myself when it comes to counter trend. That's not my game. I've taken way too many losses. So the last thing I'm going to do is be buying these retracement. But what I'm going to do is buy the change in macro when I have that conviction. I'm not going to be buying every pullback here. And I was, remember, we were selling all the way till down here. And I became more vigilant on selling over here in the past few weeks. So I was still actively selling up until now. And now where my focus is more on getting those long-term buys and positioning in play. Yes, this may not make sense to everybody, and people may still be aligned on selling. And that's fine, because sellers are still in the market. It's still not a one-sided market, right? Like how this was a one-sided selling market, we're not in a one-sided buying market yet, because that pivot hasn't happened. But we're getting those clues towards it. So, man, I could go on forever, but I have to go. I've enjoyed this meeting an hour now, and I gotta head out. So I'm getting pinged left and right. So.
Brother, thank you for being here. Thank you for the phenomenal episode, the great information. Guys, if you haven't already, run the like button up. We are a few likes away from 100 likes. You guys are goats today. Yeah, Neil, you're the best. Thank you.
Also, one thing I want to add, not against ICT or anything. One of the biggest ICT accounts, his name is Kit ICT Concepts on Twitter. He's a friend of mine. Good friend of mine. He's a partner on market. He's one of our retail partners within communities, and we're tapping into the ICT space. I'm just saying the last thing you want to do is stick to your one-dimensional view of the markets, because you're shooting yourself in the foot. You're doing yourself injustice. If I'm someone who wants to succeed, I want to know everything about the discipline that I'm performing in. And that is the financial markets. If I don't understand the finance part of the financial markets, man, it's the same thing as if I was a neurosurgeon and I had no idea about the left half of the brain. Why would you let me operate on you? It's the same thing. Why would anybody give you money to trade, or why would a prop firm want you to trade on their account, right? Man, that's it. So hope you guys have a good one. Thank you so much. I'll see you later in this week.
Brothers the GOAT.
I won't. I'm out. I'm on. I'll see you end of next week. I'm out for a week.
Oh, bro, enjoy.
Thanks, man.
Take care, bro.
See you guys. Bye.
All right, ladies and gentlemen, what an interesting market. Look at the New York session right off the open, by the way, guys. We have had no follow through. So talk about dust settle. The dust is still in the air. It's in people's eyes. People are not able to find follow through in this market right now. We also know that, what's his name is speaking. Warsh is speaking at the moment too. So we can keep an eye on our market to see if there are any headlines, if anything leaks, if he says anything. And if he does, that could help impact the market. Warsh is late, risk on all margin. Now, be careful, guys. He's going to start speaking any moment. We're going to start seeing some volatility. There's a little bit of a kick on ES to the downside there. Let's delete anything that might be distracting us. Let's also look when we're choppy like this, right? Look at a higher time frame. Get a better understanding of the market. We know we should be looking for longs. Well, then we're not taking any shorts in the meantime. We're waiting for a stronger long position. Really, guys, what a great stream. Great CPI stream. I'm sure gold might be giving us gold also. Look at this. Very poor price action. We got the strong move. Since then, it gave us the scalp opportunity that Nil gave us those longs. Since then, very range bound. He said he's looking for a sweep lower. So be patient. Let markets play out. We're very extended from CPI, so there's no reason for us to really be forcing or rushing into trades right now. Let markets come to us. That's it. That is it. I do like this 75 area on the ES, right? We have our consolidation, a little bit of a manipulation lower, and then if we can return back to the upside, that would be great. If we don't, however, then we're probably just going to continue lower. But remember, That CPI print was very strong, very in our favor of the bulls. So we do want to stay bullish on that bias, but that doesn't mean we're just going to take a random long position absolutely anywhere. If we do update our volume profile to New York session only, what we're seeing is range, right? So we would be looking to sell highs, buy lows. So be patient, let markets play out. Let's see if we get out of this range a little bit and then start to see a reversal. But right now, when we're trading like this, we have to be able to know two things. What's our current fundamental bias? So we want to know that we're on the right side of the market, so it is bullish. And we also want to know, how is the current price action trading? Is it giving us good buying opportunities? No, if you bought anywhere today over here, this wick that just occurred would have most likely stopped you out. So could this be the stop hunt before we continue? Well, that could have been our case for the past 4 to 5 candles where we wicked lower and then tried to push up. So why would we now expect that this is going to be the one that does that same thing? We're not expecting that. We're staying patient. We're letting markets come to us. Kevin, where do you anchor your volume profile on gold? So I anchor my volume profile on gold, same spot I anchor it on the S&P and NASDAQ. So I anchor it at 6 p.m. Eastern the previous day. That's for when the futures market opens. I believe Forex market is 24 hours a day. So there is no there's no 5 to 6 closure. So you can put it on 5 p.m. Eastern if you want. That hour difference isn't going to make the biggest of difference. It's just going to give you a little bit more information in the volume profile. But yeah, 5 p.m., 6 p.m. Eastern, you want to put it where that daily candle starts. Look at this, gold trying to push lower here. 5-minute closing more bearish. ES, same deal. Aren't we glad we didn't just try random longs because it looked like we could be holding? That's where patience comes in. Gold spot does close. Okay, good stuff, good stuff. I know Fridays they definitely do. Fridays they definitely close until Sunday. Gold still giving us a pullback. ES is dropping like it's hot to VWAP. Earlier we did hold VWAP for support, so it could be a similar trade situation. NASDAQ with a bit more weakness here. We could take a look at our equities and see. Let's see. What are our equities doing? Now we can also take a look. You guys know I'm a big fan of looking at SpaceX here to see how SpaceX is doing. 141. $141 a share. SpaceX is heading to $100, ladies and gentlemen. Let me know. Have you been watching SpaceX yourself? Let me know where you guys think SpaceX could be headed. Really looking at this area right here as an area of support. But and the reason for that too is because we've seen price now hold multiple times in this area. But that doesn't mean we want to just take random longs, but it does mean I definitely don't want to go short. I do not want to go short in this area, knowing that this could very well hold as support, knowing that our fundamentals are still bullish, knowing that there's too much leaning buy for us to really be confident in a sell. So 15-minute, is that giving us any stronger structure? Not at the moment. 30-minute, neither's the 30-minute. Hourly, neither's the hourly. So nothing's really giving us that strong confluence. We do have on the hourly a bit of this higher low that formed. So check this out. We're making lower high, lower low, lower high. Then it made a higher low. We swept these recent highs, both of them, made a higher high. So as long as we remain above 75.44 on the S&P, we are looking for bulls, no going against the trend. Guys, don't forget, shoot us some love on social media. Instagram is marketai.insights. You could follow my personal Instagram as well as Trading with Kev. Post content every day to keep you guys posted on the fundamentals, on anything major that's coming out, or big updates that you should be aware of as a day trader. Gold. So one of the reasons, look at this, guys, we're not shorting gold is because we know the fundamentals. I know fundamentals are extremely bullish since that CPI print. So even though gold looks like it was going to sell off here, I know retail was chasing this short. We aren't. We know the fundamentals are leaning more bullish, so we know that there's a stronger chance that the shorts fail and the buyers take control at some point. So why would we want to try to take stabs at shorts knowing that buyers have that overall momentum and hold on the market? There goes that VWAP hold on ES. That's a nice little hold there. I'd really need to see, though, possibly like a 1-minute structure shift where we sweep that recent lower high that we created. So we could sweep that. I'll look for a retest near this area and we'll take it long. If not, we are going to have to stay patient. Guys, if you haven't already, run that like button up. We are 4 likes away from 100. You guys are absolute goats. This has been a phenomenal episode. Great CPI breakdown. I'm really looking forward. Non-farm payroll is also going to be a phenomenal stream. Me, Imre, Nawab, it'll be great, guys. And tomorrow we have the introduction, the full launch of our Market AI Trading View integration. So that's also very exciting. We got a lot in store for you guys. I hope you guys are excited as well. NASDAQ giving us a whole lot of nothing. Gold giving us a whole lot of nothing. Yo, Yusuf, man, it's all you guys too. We're a community here. We're a team here, man. Love to see it. We got good strength, growing very strong. Make sure you guys join here every morning. Make this part of your routine. When we talk about building routine and trading, it's not just about, okay, this is my strategy I follow. It's about everything you do. Time you wake up, when you get out of bed, the time you give yourself in between waking up and getting on the charts. Are you giving yourself the opportunity to walk around, stretch your legs, get the blood flowing, or are you just sort of rolling out of bed and then jumping on the charts? That's a poor habit situation right there. We do not want to be doing that. But great stuff, guys. Great stuff. But yeah, join every morning. Listen, wake up in the morning, throw on some market in the morning streams. We're live every morning, 8:20 a.m. You listen to us for a little bit. Then you get on the charts yourself. You do your own markup. You listen to us. You get an idea of where the fundamentals are located, bias of the day, and then you do your own analysis in the meantime. Give yourself that more confidence in your trading because now you're going over a show with people who are doing very well. You're finding the strong bias. You're finding the overall trend, and you're able to take it from there. S&P trying to hold, really struggling on this. If we do get back above that 75, 77 that we mentioned, which is right over here, which now we can look at this one right here, 75, 77, then could possibly look for longs. But if it just keeps going lower, we can't emphasize it enough, man. Catching a falling knife isn't our goal as traders, but neither is going against the trend. And we know the trend is still overall bullish, but we also know that markets can pull back. Ideally, I would like to see a pullback to 75.57. I think that's a great spot. That's that hourly area of support. I think a lot of people at this point, if we could break and hit that 75.57, a lot of traders are going to be short at that point. A lot of people are going to try to sell, thinking markets are continuing lower, just for markets to reverse against them. So again, S&P ticks lower. We're happy we're not forcing any long trades right now. But we also don't want to force shorts because what do we see with the shorts? You could go short at this low, and then it could wick up, and then the next candle wicks higher. Boom, quick 6 points against you in a short position on the S&P. You're getting stopped out. NASDAQ, 40 points against you very quickly. We do not want to go against these buyers right now. They have a very strong hold. Gold. It's like gold's looking like it's holding, but again, we're falling back into that situation where if you take a random trade just because fundamentals are long, you're going to get stopped out because you're building bad habits. You need your fundamentals and your technicals and your edge to line up together because that will really give you the best performance and the best reactions to the market versus just trying to force shit left and right. Weighted index we have down here, that's Apple, Google, Microsoft, Meta, and NVIDIA trying to hold VWAP as well, but still trying to move lower. Stay patient, man. I cannot emphasize enough the amount of patience you need in these markets. Oh, guys, you know what? I will say, shoot me a follow, Twitter, Instagram, wherever. Trading with Kev on Instagram, Trade with Kev on Twitter. I want to host some type of game night sometime soon. I don't know if you guys have ever played it or heard of it. There's an online, like an application I used to do in school years and years and years ago. It was Kahoot. I want to do a huge interactive game night with you guys. I think that would be a lot of fun. Test your guys' knowledge on trading, on fundamentals, and everything like that as well. That'll be pretty cool. But yeah, let me know if you guys are interested. ES struggling. Still hasn't broken that recent low, though. So again, going short, shooting yourself in the foot, going long, shooting yourself in the foot. Just be patient. Let something play out with a bit more clarity, a bit more strength. Gold doing well. We mentioned before, random longs on gold aren't going to work, but longs have a much stronger follow through than some type of short right now because of the overall bias, right? So we always have to think of it that way too. If fundamentals are bullish, then I know that the odds of a short decrease. So if I want to go short, the odds are less than 50-50 now. They're 30-80. Whereas the longs are much more in my favor, which means you can also know that we're probably going to have that follow through, right? We're probably going to have that follow through. Buyers are most likely to take that control over the sellers trying to take control. Kahoot is an OG. Yeah, sounds fun. All right, cool, man. Cool. Yeah, that'll be great. That'll be great. We'll put something together. We'll get that going for you guys. 100%. Let's see. Gold continuing. ES struggling. Again, one of the main reasons we're not trading the S&P right now is because we know we're bullish bias, but we also know the sellers currently have a little bit of control there, and we're not forcing trades against that. Let's see. Gold trying to hold. Again, I wouldn't really be looking for longs in the middle of this range here on gold. If we can manage to break this recent high, what we would be doing is we'd be creating the higher high, higher low, higher high, higher low, higher high. Once that is confirmed, we can look for another higher low, take that on the higher low, and take that towards those higher highs again. What I was ideally looking for on the S&P 500 today was it to hold somewhere and make its way to that previous day high. So previous day high on the S&P is at 76.15. Now, that's plenty of room, right? I'm looking at 40 points right there from where we are right now. So I could still be patient, right? I don't want to force it here because guess what? If we pull back even further, then that gives me an even better opportunity for 60 points on the S&P 500. But if we do hold here and we want to continue, then I'm ready for that confirmation. I'm ready to take a trade, and we'll take it for the 40 points. But either way, we're able to take those trades and those paper cuts leading up to that bigger trade that will make our money back for us. Look at that, man. Wow, look at that. Another low on the S&P. Glad we're sticking out of this, man. Very choppy markets. Pushing into this low volume area right here near this purple level. I do think we clear it. I think we want to head towards that hourly area we have marked out. I'm going to change the color of that so you guys can see it a bit more clearly. But ideally would want to see us come down 75.57. That's what I was looking for on the S&P. We do have a passive buyer sitting here at this 75.65 area. Just be patient and wait. Big drop right through it. Markets did not care. Just wait, guys. Just wait. We do not want to fight this. We can look at our daily time frame, see where our open price is. Our open price on the S&P today is right at that support area. So that support area lines up with that opening price. That's a strong confirmation on that zone for me. I don't think we had any headlines from Mr. Warsh. Nope, 18 minutes ago, which is 2 minutes before the call. There's another drop on the S&P. Moving lower, right into that zone, right into that area. Well, let's just wait. Not taking it randomly. I'm not a fan of taking random trades. I'm just not. I want to have structure around it. We want to have an idea about the zone, about the level, not just jumping in at random. It's a nice reversal right there. 3 minutes left on the 5 minute, though. We know that it's plenty of time for it to make one more run to the downside, but it's also plenty of time for it to run to the upside. So, in my opinion, matter of staying patient, seeing how we want to react off of this area. Can we get above this shelf right here and look to hold it to go along to create those higher lows? Or do we just continue dumping here? And there's a lot more outflows from this initial pump. But we'd want to see buyers hold, especially off of those fundamental analysis we've had. Can always look to try to take it up here. I'd rather try to wait for reaction first or even let this candle close first. So we got 2.5 minutes left there. We haven't forced a trade yet. Why would we start now? Never worth it. Gold, look at this. What I say, man. Bad habits are created when random trades play out. Well, guess what? This would have been a random trade. You would have been stopped out. You would have went, oh, well, I went long market and Kevin told me to be bullish on gold. Why did it stop me out? Because you didn't do your analysis. You didn't have your technicals line up with your fundamentals. Therefore, the ship fell apart. Really big buyer stepping in on on ES here. If it does try to spike back above 75.63, would take it here with stop at 75.60. If we don't, however, then we will just let it play out and see if we hit that level again. Okay, trying to play out there. Take it light size, stop around that 60. Just for now, I'd rather be a bit more patient though and see if we get a closure above this zone on the 5 minute and then possibly get a retest on the next 5. With that minute 14 left, I do want to see these sellers get swept though. There we go, getting a bit of a reaction there. Got to see if we have some follow through though. New 1 minute candle. I believe that's a new 5 minute candle. No, we have one more 1 minute before we get a new 5 minute. So let's see if we get some follow through. Nice little entry so far. Good reaction to that point. 75.60 is stop at the moment on these longs. Just playing it a little tight because we're looking for that quick reaction. We want to see those buyers have momentum because of how strong the fundamentals and the CPI came out. If it doesn't play out, it doesn't play out. We protect ourselves. That's what stop losses are for. Can't emphasize that enough. NASDAQ trying to hold VWAP. Weighted index trying to hold higher and move higher too. VIX is trying to move higher, which is not the best case for us, but look at this, guys. What an entry right there, man. Yo, throw some W's in there. And the lab's not the only one who gets solid entries. Sometimes I'm okay. If you got that big profit right there, boom, 5 points, 6 points on ES, take it. If you're happy with the profits, take it. I'm holding. I do want to see if we can manage to move a little higher. I'll scale out of some just to protect myself here, but I do want to see some follow through on the S&P. There we go, baby. Nice. Give us that quick move now. If we sweep 75.75, we should be in the clear on these longs. That's right over here. 75.75. Sweep that. We're in the clear on the longs. We look to hold this and head towards that new high of day. Yes, sir. You already know, guys. Let's see. We'll see how it plays out, man. That's why I say protect yourself, though, because we have been making lower highs and lower lows. This was still a lower low right here. We really need to get above the 75.75 point. If we don't, then technically sellers still do have a little bit of control in this right now. But we're trading off the bullish fundamentals. It came off of that technical area that I had marked out. It's holding VWAP too. There's definitely a few forms of confirmation lining up here that's telling me to hold this trade. There we go. Getting a bit of a climb. Come on, ES. Let's go, baby. Let's go. Run it up, run it up. We want new high a day. We want VIX is starting to drop as well. That's a nice confirmation on these longs. Just got to be careful. Got to be careful. We want to see a quick move above the 75.75. Should be in the clear. 15-minute time frame. Look at that 15-minute. I didn't even notice. The 15-minute we're on right now did not have that upper wick. Not a real strategy, not a real system, but it is something to really keep an eye on. Getting a little bit of resistance above us here at that 75.75. Sellers definitely don't want to give it up without a fight. Like I said before, if you're in good profits and we're failing to make that new higher high, take off the table here, right? What if we fail and we end up making a lower high right here? You don't want to be like, wow, I was in all these profits and then it reversed on me. I let a winner turn into a loser. No, scale out of some, protect yourself, and then let the rest run. But 75.75 gets taken out, and we should be okay. NASDAQ looking good. Got to get the weighted index here. There we go. ES, break that, man. Break that. So close. Boom. What did it tap it, bro? It tapped it. Go, baby, go. Go, baby, go. There it is. We're above it. Love to see it. That's what I'm talking about, baby. Yes, sir. Now we got to get above this next level, 75.77. We are okay. Passive buyer 75.80. Nice little run right there, ladies and gentlemen. Great job. Again, W's in the chat there. Killer stream. Killer trades today. There we go, ES. Run it up. Run it up. That's what we like to see. I am going to get out of a couple here. I'm in some micros. Took it real light in size. 75.80 would be a nice first take profit. We're breaking previous lower highs, though, which tells me these buyers are holding. What an entry, man. What an entry with the technicals. What an entry with the fundamentals. Keep going, ES. Keep printing for us. Hell yeah, man. W's, baby. W's. Yes, sir. Keep going. Guys, great work, great job. Look at that, straight up from our entry. Straight up from our entry. Like I said, I am going to lock in a couple contracts here myself just to play it safe. But wow, nice move right there. Want to still stay bullish off of those fundamentals. W's, W's, W's. Now let's see. We do have a big passive seller wall up here at 75.80, and that's why I was looking to try to get out of a few up here. But I do want to see all this buying strength that came in. Strong buying volume, just take us up. I wanted a new high of day on the S&P 500. So what I would end up doing is I would take some off the table over here to lock in gain and make this a no-lose trade. So if the rest do run to stop loss, I still locked in profit on this trade. This is the real World Cup. When is your twin speech? I know, yo, Warsh was supposed to speak already. 10 o'clock he was supposed to speak. But it's an invite meeting, which usually means they don't really announce too much. Your Naz buys, nice, bro. Naz also off of VWAP here. A little concerned on the lack of follow-through we have right now, but we still have 50 seconds left. I'd want to see this current 5-minute try to close above this purple level. I'll change the color again, make it a bit more clear for us. This yellow level. Close above that, and I'm not looking to scale out of any. I'm looking to let this winner run. Even back towards 75.88 would be great. 7,600 key psychological level up over here would be awesome. 20 seconds left. We are struggling a bit, still showing buyers are trying to support price though. We'll see. Be patient, be careful. This is why we take profits, why we protect our position. Like Nilab says, right? You want to take profits, pay yourself, then let the market continue. It is 10:25, ladies and gentlemen. Yeah, it's pretty big. I don't want to say big rejection candle there on the 5-minute. We did close green in our favor. I will keep stop loss down over here, entries down over here. So we're just cruising in profit right now, trying to let it play out. There's a headline. Let's keep an eye on that very quickly. Inflation is a choice. That's the dumbest thing I've ever heard. That's what? We want economic growth to be more broad-based. What is going on with some of these headlines that come out lately, guys? So, but yeah, I'm not a fan of being in trades during headlines. So we'll see if we can move our way back up higher again. 15-minute time frame closes in 4 minutes as well. 30-minute also closes in 4 minutes. Both of them looking like buyers are holding. So I'd much rather try to hold this long position, especially because we were able to take such a nice entry down here. Because guess what? If we run into profit over here, we're looking at a 12-1 off that entry. If it runs to stop loss, who cares? Set up better buy price maybe. Yeah, possibly on this little pullback we're seeing here. Oh man, more headlines. Warsh. STFU, right? We have tools to deliver that. We still have price stability. I mean, you'd hope that these are all positive headlines. We can hit the a little, I hate that it's not the brain icon anymore. We could hit the sparkle icon over here and it'll tell us, okay, risk off, reinforces hawkish. That's not too ideal. But again, CPI was much stronger today. So be a little patient. Let this play out. See if we can get back above that recent 5-minute high. If we can't, then I will be a little more concerned on this trade. If we do, then great, we hold it and bang, bang. Nice. All right, that's where I'll look to get out of some. We get a big pop like that, I'll look to get out of some at 75.80. 75.80 on the S&P over here. Beautiful spike. Give me one more little push up. Next, they'll tell the homelessness to just buy a, yeah, right? Tell the homeless to just buy a house. Why are you homeless? Just buy a house. Why? What do you mean you're broke? Just get a job. Like, what? That's great. That's great. What a spike right there, ladies and gentlemen. We'll see if we have some follow through. I'm looking to get out of some of my contracts, 75.80. Want to try to let the rest play out. 75.70 could be a new stop loss, but I do want to be a little careful not to make it too tight. Got to see some follow through here, man. I will move stop loss to 75.61, 62, it looks like, 75.62, right? Over just a few more points higher. just in case a headline comes in, we get a crazy spike lower, you know. But want to stay bullish off those fundamentals, want to stay bullish off the 15 and 30 closing soon. Minute 50 left in that 30 minute to close and 15 minutes to close. So again, ideally, these time frames tell me to try to hold this. But I want to be careful. A lot of times when we get those spikes like that, we do end up getting, I don't want to say a reversal, but a pullback at least, because a lot of people get triggered into longs on that just to then get stopped out. So be careful. Don't be greedy in these markets. And if you have, oh yeah, the spread's getting a little wide here. I think they're expecting something. Be careful. I'm looking to get out 75.80 with these S&P longs. I might just try to cut it here at the 75.75. But we'll try to let it play out. Be patient. Let our winners run. And if it does fall back, it falls back. That's what protection is for. That's what stop losses are for. What a spike. What a pullback. 53 seconds left in this. We have 53 seconds left in the 15 minute, which is closing very nicely how I'm looking for it to close. 30 minute also giving a nice rejection candle here. So again, overall, 15 minute and 30 minute are going to hold a lot more weight than a 5 minute, than a 1 minute. So I'd rather hold long knowing those higher time frames are trying to close in our favor. Fed's 2020 framework was a mistake, did not succeed. Bro, it's going to be real awkward in the FOMC meetings when Powell's like sitting there and Kevin Warsh is like, everything the last guy did was horrible. All right, come on, give us some follow through here. How's that 15 minute looking? Good, 6 seconds, 30 minute. Oh my God, that's looking good on these longs, ladies and gentlemen. We'll try to hold. Still want to see that 75.80 get hit again. Very close to it right now. I will say VIX at a key level is not ideally what I want to see. So I will get out of a few at the 75.80 and I will let the rest run. So we're about 2 ticks away, 1 tick away, and bang. Oh, come on now. No way it just tapped it for a second, didn't film it. And oh my God, that was so close. Even cutting it here, we're looking at a 3-1, right? So don't want to be greedy in markets. We want to let our winners run, all this other fun stuff. Yeah, nice move on the S&P. Beautiful move. Took US 30 Ls today. Oh, what happened, brother? What happened? Dude, no way it rejects right off my exit point. Please let me out of here. 30 minute though. 30 minute was looking nice and bullish. Need to see the 30 now scale above this 75.83. Get above 75.83, man. We're golden on these longs. Again, want to try our best to hold this, knowing CPI print was way below expectations, which usually gives us a trend if it's above or below the forecast and the expectation. So really trying to hold this, trying to move back higher here. We're back at 75.77. What I'm doing at the moment is I'm managing my position. I'm looking to possibly get out at 75.80, but I'm also looking to move my exit position in case we get another one of those spikes to the upside. I don't want to cut it at 75.80 if we get another spike to 75.85 to 75.90, right? Because remember, my original target, 7,600 even, key psych level, and previous day's high. So I want to see these areas get taken out on the S&P. If they don't, again, we have stop losses in place. We have protection in place. That's how we trade these markets. Guys, let me know. What are you trading today? Take any trades? If you're still here, smash that like. Smash that repost button too on Twitter. Here's 75.79 here on the S&P again. Next passive sell area is 75.81. Here's 75.80. So moving take profit for a moment. Letting it try to run. There's above 75.80, 75.81. If we scale quickly above 75.82 here, I'm holding position. We're trying. We have a big buyer here. I will look to get out of some just to play it safe. Still going to hold a few micros, playing it safe again, letting this winner run. Now the last bit of micros I have, I'm being patient. I'm letting it run to that full take profit or it runs to stop loss. It's the only way I get out of this trade now. Buying volume is here. We're doing good. Anchored volume profile. How do you turn on that indicator? Good question. So the indicator, this blue guy over here, this is our anchored volume profile. So this is a tool. My taskbar is being a pain in the butt again. We'll see. We'll see if I could get it up here. There we go. Okay. So anchored vol. Oh no, this is the wrong one. Oh my goodness. Let's see. You guys see what the glitch is right here, right? It's not letting me hit that zoom in button over there. There we go. ES continuing higher. Now we can mess around. We're in a trade, but we're messing around because markets are going to do their thing. At a great entry point, we're respecting stop loss, respecting take profit, and letting it run. 10:33, by the way. So we're going to be wrapping up market in the morning very shortly. But anchored volume profile, it's the tool on the left-hand side over here on Trading View. And you're going to come to forecast. And you're going to click anchored volume profile, not anchored VWAP, anchored volume profile. You could star it so it's always on your chart. And when you click it, you're going to then click on your chart wherever you want to place it. So I like placing at 6 p.m. Eastern. Bang, baby. What? W's, baby. Getting the heck out of there. Wow, what a play. What a play. Guys, we catch those. We catch those in market in the morning, baby. Wow, that was wild. Give me one more scoop up right here. Amazing. Amazing. Guys, that's killer. That is killer. One more run up. I'm getting out 75.93. 75.93. One more little run up right here. I'm fully out. Fantastic. 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 Wow, that was killer, guys. Guys, W's. Hella W's on that one. Hella W's on that one. That is insanity. There we go. Here we go. Get to that full TP. That was beautiful, man. That was beautiful. I'm going to exit here because that big jump was unexpected. That was wild. That was insane, guys. Guys, great trades. Great stream today. This is why you join market in the morning every single day. I kill it. Nil kills it. Jeev kills it. Imre kills it. You guys got a stacked setup right here. Stacked lineup, man. We're like, what is it? The 93 Jordan, 92 Bulls, bro. We're killing it, man. What a phenomenal trade, guys. Great job. Kev, what made you decide S&P buys and where from? So I was looking for, real quick, and then I'm going to end the market in the morning stream here. I was looking on the hourly time frame. We had this area right here. We have this support area where price moved higher from, and this support area created a higher low. So I was looking for price to retrace to this area and hold to create a second higher low. And that's exactly what it did. Came down, it tapped that zone, it reacted very quickly. I use a tool called Bookmap. It's order flow. I have it on my side panel here. It showed a large buyer stepped in after we swept. It was an order blow. It was an order block area, which is support. We have our fundamental bias with us too. There were so many reasons to take this trade, so many confirmations, and that's how we do it, baby. Yes, sir. Great job. Looks like it even wants to continue from here. I said I would have let those contracts continue. Because of that spike, I'd rather be a bit more, not skeptical, but a bit more, what's the word? Financially smart, but a bit more protective of the capital, of the gains on that trade. Overall, that was a 6-1, guys. You caught here on Market in the Morning. W's in the chat. Run that like button up. Join me tomorrow, Market in the Morning again. Tomorrow actually is going to be Jeev and the lab. I will not be here. I will be on the back end. You can shoot me a message, hey. But great job, ladies and gentlemen. Have a great rest of your day. Good trades today. Phenomenal session. The lab gave some great gold calls. I gave phenomenal S&P setup. Bang, baby. That's what we like to see. Mel, I look forward to having you on this week. Guys, Mel's going to be joining us for Thursday's episode. So let's keep the stream running. Let's keep it going hot. And let's kill it this week, man. Every episode, we want 100 likes. So come back tomorrow. We're going to keep doing it well. Guys, have a great rest of your day. Follow us on social media at market_AI, at marketai.insights on Instagram. And you guys can follow me on Instagram is Trading with Kev. Have a great rest of your day, everybody, and I will see you later. Peace.